Morning, doing all right. Put a little bike ride in on the way, so. Right. Oh, didn't go with my outfit today, so yeah. It is a good look though. That was fun.
Welcome to this budget work session. I think we're going to have our other two colleagues here, but want to get started right away. We've got a presentation from the budget director and his staff, so I'll let you take it away in a minute. But I guess I just want to say it's a combination of good times and good management that gives us the opportunity today to allocate a little bit of money and to do some good. That's how I would characterize the situation. We'll let our professionals do a better job of it than that, but that would be my soundbite summary, and it's always better to preside over improvements than the other. So unless there are other council comments, we'll turn it over to you and get started.
Great. Thank you, Mayor. I'm Andrew Scott, City Budget Director, and we're going to be joined by some staff as we go through this today. Just to give a high-level overview of what we're going to do, we do have 3 hours blocked out. I'm not sure we'll need the entire time. It depends a little bit on the discussion and questions. The first 2 hours of that is really focused on the fiscal year 2016-17 budget. So looking forward to next year's budget. We're going to hear, as we do every year, from Josh Harwood, our city economist, who's going to walk us through sort of the city's economic outlook, economic condition. We're then going to talk a bit about performance and where we have been, but really more looking forward and how we're integrating that into the budget process. We'll then come back and talk a little bit more specifically about some of the issues that are going to be facing us in 2016-17 and some of the overall process questions that we want to put before council in terms of how we run this next budget process. At that point, we will then shift into the fall bump work session, which will be at the end of today, and that'll be just the traditional fall bump or traditional bump work session where we'll sort of walk through what's in the mayor's proposed bump, take questions, listen to any concerns that council has, and then we'll break. So any questions on that agenda before we dive in? Great. Well, with that, I will turn it over to Josh. You should all have slides in front of you, which we will also be going through up on the screen for those who can see that. Take it away.
All right. Thanks, Andrew. Again, Josh Harwood, the city economist. We're just going to kind of give a broad stroke about economic indicators and what it looks like in the city right now. I don't think much of this will come as a surprise. Things are looking pretty good. As we look at sort of our initial local economic indicators table, with a couple of exceptions, notably the 554% unemployment rate, things are looking pretty positive. There's a little typo there. That should be 5.4%. But no, things are looking very good. We're looking at relatively high employment growth. I'll talk about that more in just a minute. Housing prices are appreciating, but except in some pockets, so there's some pockets that are rising at unsustainable levels, but citywide, it's looking relatively stable. Housing permits are down a little bit this year. We think there's a little bit of a reporting issue, so I won't go into that too much. We're trying to figure out sort of where that is. You might have read a couple of, or maybe last week, we have the second lowest office vacancy rate in the country. So the office market here is very tight. The only market that's tighter is probably our apartment market, our multifamily market, where we've stayed below 3% for a couple years now.
Josh, let me interrupt you for just a second.
Yeah.
I've been remiss in not introducing Frida Christopher, who's here as an alternate for Katie Larcell this morning. So some of you know Frida, some of you don't, but we wanted to make sure that she got introduced and to your fellow volunteer advisors and obviously to the staff who will be making the presentations this morning. So it's nice to have you here. Please.
Thanks. As we move to the next slide, just a broad look at the employment growth. What you'll notice is that employment growth is basically as good as it gets, we think, right about now. What we're seeing is commensurate with what we've seen in past expansions, especially given the maturity of our economy, local economy here. We think this is basically as good as it's going to get. We might be able to sustain it for another year or two, but we don't expect us to pick up any more growth, any more speed. I should note too, the growth has been a little different over this expansion than in prior ones. A lot of what we talk about when we talk about the job growth that we've seen over the last 4 or 5 years is really what we're calling job polarization. We've got a lot of high-end jobs and a lot of low-end jobs, but there's not a lot in the middle. And that's sustained itself for the last few years, and that's still what we're seeing today. We've got high-end professional business services with high incomes, relatively stable jobs, and we've got a lot of low-end retail and tourism. And so that's it's sort of a mixed bag in terms of how good it looks.
Does employment growth just measure full-time employment?
It's total jobs. This is total jobs. So when we look at hours worked, that's increased quite a bit. So if you look broadly, but that doesn't mean that there still aren't a lot of people working multiple part-time jobs or that would rather have one full-time job. That's still happening, particularly at the lower end. If we look at the next slide at how we compare to other cities, we're in good company. We're right next to Seattle and San Francisco, wedged right in between in terms of how good we're looking. This is not atypical. During expansions, we do better than average. During recessions, we do worse than average. It says a lot about our employment base. We're a little more manufacturing heavy, although that's changing, but this is not atypical. If we look at the next slide, declines in unemployment rate. You'll notice it's a kind of a weird hodgepodge of cities at the high end. This is a decline in unemployment. So we've seen unemployment fall from about 11% in the city down to 4.5%. And when we talk about unemployment, we're talking about residents. So they may work out in Hillsborough or Beaverton or Vancouver, but the residents of Portland have a very low unemployment rate. It speaks to our cost of living. As it gets higher, it's harder to live here without gainful employment or dual income employment. But this chart, you can see, you can be on the sort of the good side of this chart for a couple of different reasons. Detroit has seen the biggest drop in unemployment rate from 26% to 13%, still higher than we were. And most of that is because they've lost more than a third of their workforce. So it can be a little bit of a mixed bag. Let's see here. One particular note, tourism is incredibly strong right now in this area. We're seeing massive increases in our transient lodging receipts, both because of higher occupancy and because now we can charge a higher rate. We're still cheaper than most cities on the West Coast, so there's still room to grow. But the industry has taken notice, and according to the consultants that we work with, we've got about 2,400 new rooms in the pipeline, just in the city center alone, which would be about an increase of about 30% in the available hotel rooms in the city. So we're seeing a lot of growth in that area. As we move to the next slide, we talk about inflation. Inflation has been extremely low, especially around the country, but also locally. And this is driven a lot by energy prices. So it's not as big a concern as it might be otherwise, but it is very, very low. And it's something that will impact our budget, maybe to the positive. If you're looking at the city as a whole, if you're a city employee, not as positive because you're looking at a pretty low COLA probably for next year. And we'll be pushing that sort of collective bargaining limit of 1%, is my guess. I want to talk a little bit as we look at the next one that we do have some issues in the city. The issue of the day is housing. I think we can take a moment to recognize that part of the housing problem, a lot of the housing problem, has been brought on by good things, things that cities want. We're importing highly educated workers with good incomes, and that are young families and young couples, and so we're seeing some income growth because of that, and we're importing some wealth as well from California. I'll talk about that a little bit more in just a second. So that's part of the reason why all these trend data look good next to other cities. And so while all of these things are looking good, there's a more than sneaking suspicion that part of the reason they look good is through displacement. We're importing a bunch of higher income, higher wealth individuals and pushing some people to the city boundary and beyond. And so as a result, in aggregate, the city looks wealthier. But part of that is a different demographic. As we look at the housing market as a whole, this slide was put on here mostly just to show we've got record low inventory and record high prices. So expect the prices to continue to go up. I know in inner Northeast Portland, there are massive investor groups shotgunning proposals to households to see if they're willing to sell. And when you get that kind of institutional capital into the market, you change the market dynamics and make it more attractive for people to take the money and run. But if you have to buy in the same market, you're kind of out of luck. And so we've seen a lot of influence of that lately. Let's see. Something else that came out of the last recession that we're seeing sustained is that Portland's got a lot more renters than it used to have. Probably for a variety of reasons, some of which are demographic, some other reasons are financial, certainly. But this change from about 42% to about 49% is the equivalent of between 15 and 20,000 households. So that's part of the reason why you're seeing massive multifamily growth and multifamily construction, is that we've got a change in the dynamics of the consumer, the housing consumer. And so that seems to persist for now. And I don't expect it to change. I know Metro doesn't expect it to change. That seems to be a character going forward of the city is going to be much more multifamily.
So is that because the construction in multifamily that's happening is rental? I mean, is it a chicken and egg thing? Which comes first? That people can't afford to buy condos, so they're having to rent, or what do you think is happening? I think
that's more likely the case than the other way around. Part of it is demographics. So it's older people retiring and downsizing, and they may get a condo, they may rent, but there's a lot more multifamily housing demand on that end. Also, the type of individuals and young couples that we're bringing in have high student loans that prevent them from buying houses sometimes. They are taking, it looks like, a Portland discount to come here a little bit from the Bay Area. So I think it's a little bit more from that side than the direction.
Josh?
Yeah.
As an economist, do you have any concerns about a city where almost 50% of the residents are renters?
It's a good question. I don't know. I haven't looked at other cities to know what that dynamic looks like in other comparable cities. So it's something to look at. I'm not sure that I have any massive concern on its face. We do know that, at least historically in Portland, we've had a lot of long-term renters. So, it's not as transient a population as I think a lot of people envision or a lot of people experienced when they were renting before they bought their house. People are delaying buying houses a lot longer, so they tend to stay in place a little bit longer too. But we'll see.
And do we have any data about how that splits across different socioeconomic groups? I'm worried that we may have some of our more vulnerable population that is now locked out of home ownership.
Yeah, I think that's exactly the case. I mean, the reality is, and especially if we see any rise in interest rates. I mean, interest rates are so low, that's pricing a lot more people into the market. It's also helping feed this investor frenzy too, that are pushing up prices. But when you can make back your money in 10 or 12 years renting a house, if you're an investor and you're putting money in, and it makes more sense, especially with low interest rates, to go that way. And I think we're definitely seeing that. And certainly the renters are more vulnerable to the higher rents being pushed up. We're reading that in the paper. They've got stories. And with the investors come these sort of mass renewals and rebuilding of individual buildings that cause some displacement. As I mentioned, incomes are rising, and we're looking better, and we're rising pretty significantly relative to other cities. And again, we're in good company next to Boston and San Jose, and we're not far from Seattle and San Francisco. So we're becoming more and more wealthy. Again, some of this is probably due to displacement. We have a different population than we did 4 years ago. And that's changing probably even more rapidly. But the reality is that the incomes citywide are getting better. But they're not rising as fast as rents. So if we look, and this speaks a little bit to Chris, to your question, is what we're seeing is that this is the change in the proportion of renters spending at least 30% of their income on rent. And you can see that in a lot of cities that's gone down. More people have gotten jobs, they have higher incomes. Rents have stabilized and those kinds of things. And we're seeing the opposite here. So they're just not growing quite as fast.
Josh,
Yeah.
looking at this, because there are so many cities sort of on the right side of this, but I have to assume their rents are also going up. Is it the case that their incomes are going up faster than their rents, which is causing that
Yeah.
to drop below the 30%?
Yeah, definitely. I mean, that's definitely what's happening. And their job growth is maybe less polarized. You might see higher end job growth too. That are influencing those rents. So this is kind of a tongue-in-cheek, but the reality is that we're getting a lot of migration, and this is statewide. These are licenses surrendered to the DMV. We had to use a statewide number because you can do it at any DMV. It doesn't have to be location specific. But it turns out about a quarter of them are from California, and about 20% are from Washington. We spent a little bit of time. And we'll put some stuff out probably later this winter about IRS migration data, which I think is a little more telling because we can get that down to the county level. And so what we can see is X number of filers filed in whatever state or county in 1 year, and then the next year they filed in Multnomah County. And we can see how much income is being effectively brought in versus the income that's going out. People that were filed in Multnomah County and then the next year they filed outside of Multnomah County. And so we'll get a little bit more dynamics about what that in-migration pool looks like. The problem is that it's IRS data, it's delayed a couple of years. So I'm really curious to get sort of the next batch in the next couple of months, and we'll see what we can glean out of that. So why are we getting a lot of Californians and a lot of people generally is we're still relatively inexpensive. People who want to move out west, we're still cheaper than just about every California city, with the exception of Sacramento. And even rents are cheaper still. And so, while we've got these issues, as has been mentioned prior, so does most of the West Coast. There's a housing affordability issue up and down the West Coast. And so for people, and young people in particular, that want to move out west, we're still an attractive market to come here. For companies down in California that want to move here, we're attractive as well. I was at the Oregon Economic Forum a couple weeks ago, and the editor of the Portland Business Journal mentioned a company out of San Jose that decided to move up here in the spring. And they offered all their employees, if you want to come, you guys can come, we'll set up shop in Portland. Every single employee came. So it speaks a little bit to the livability, but the affordability as well relative to the Silicon Valley.
So Josh, could you, it's hard to put all this together when you have separate pages. We're relatively inexpensive, incomes are rising, but we have more renters. Can you put that in a broad picture for me as to why all of this is occurring?
We've got a little bit of a housing supply issue. That's part of the reason why you're seeing all the building that you're seeing. It takes a little bit of a housing supply issue. That's why you're seeing all the building you're seeing. It takes a while to react. We had a lot of pent up demand too. it's a funny story, but it's a true story that we had during the recession. We had a lot of kids in the parents' basements that are now have jobs and are moving out. So you've got those people in addition to the typical group that come every year. So the market took a while to react to that because rents had to get high enough to make the capitalization on the markets work.
So with the low interest rates and the rising incomes, I would have expected to see more people buying and the number of renters going down, but we see it going up. Is that due to a change in people's philosophy on owning? Is it a lot of people coming in and renting in the short term, a year or 2 years before they buy? Do you have any sense of that?
It's two things primarily. One is demographics, as I mentioned before, sort of older people downsizing, and there's some renting in there, and younger people coming here. And so, it's harder to buy a house when you've got a lot of student loans, and that's happening there. The other thing is this investor class that's come in. I think that's been a big influence where they can bid up and pay cash for a house. It's appealing to sellers. That turns into a rental house almost immediately, pretty much, and stays that way for a while. So that investor class and again, these people, it's still cheaper than Seattle. It's still cheaper than doing this in other parts of the West Coast. And there's a desirable market, and they're seeing rents rise. And so I think that influx of money into the market makes it more difficult for buyers to.
So I have a house next door to me where a California investor bought it, and I now have 8 20-somethings living in that house. Is that
That would be a zoning violation if you want to report.
You should sell
is.
your house to that investor.
Huh? Well, I'm waiting for that call. Is that where we want to be as an economist again? I don't know if that's good or bad. I know what I think next door, but I don't know about a city's profile, whether that's good or bad.
I don't think it's sustainable, which is why I think it's probably bad. I don't think that this is investment money that chases the next dollar. And so at some point, the next dollar won't be here. And so to the extent that triggers sort of people getting out of the market in mass quantities, it's not just you and me selling, it's somebody selling 8 homes in an area that they've bought and an investor, and now they're getting it out, or they're selling 2 now and 2 the next year and 2 the next, so that the exit strategy out of this, I think, is harder. Yeah.
Josh, on the rental side, is that a mix of studio, 1-bedroom, 2-bedroom, that sort of thing, or?
Yes, it's everything. It's just we can break it out a little bit further, but that's what it is.
Okay, there could be different mixes in different cities, but
no, I think yeah, absolutely. There's different mix in different cities. There's also a changing mix in Portland. The luxury market in Portland is the one that's really booming right now, and so so it's where developers can make the most money. So that's where the first dollar is going to go until that market's satiated, and then they'll go down the chain.
thank you.
Josh, looking at the cities where rents are not going up as fast as ours, or rents are staying closer to the increases in income, would it be possible to look and see whether public policy is influencing that, looking city by city? Like some people would say that you can keep rents down by having inclusionary zoning. Some would say that you keep rents down simply by having rent control. Some people would say you keep rents down simply by allowing more building. So is it possible to look at some of these cities and determine whether it's, the differences between them and us is independent of those factors, or there is some argument that those factors matter, and if so, which matter more or less?
Yes, is a short answer. We haven't done a comprehensive look at it. I've started a little bit, just because it's my world, looking at economics papers and trying to see if public policy has worked in certain areas for affordable housing. But you bring up another point. We can look at comparable cities a little bit more too. And so the housing stock will drive what's comparable. So we'll spend a little bit of time. We can look at that.
Well, I want to just note something back to Donald's question. We still want to be a middle-class home-owning city, right? We want to accommodate people who want to rent instead of own a home, and we want to have a variety of housing types, and we want all those things. But we have prided ourselves, and still hope we are, a middle-class home-owning city. And we've talked a lot on the housing side about that issue, and we need to. But we just touched on something very briefly in the economic indicators that's worth going back to, and look at those columns of indicators. There's a lot of concern about keeping and adding so-called middle wage jobs, manufacturing in particular. And the one economic indicator on that list that is spectacularly negative is Port of Portland marine freight. And that's not because we're shipping less wheat. It's because we don't have a container port anymore. And the public policy failure that is the most egregious one in terms of our economic future is the failure to resolve this issue about how we once again become a container port. And I talk to small manufacturers every week who are talking about how it's costing them $500 more a container to get whatever they make here or whatever they're shipping here to make things in from the Port of Seattle or somewhere else. So if we want to look at the big picture of the complexion of our economy and whether we have people living down the street that make something and therefore can afford their house payments even though their property taxes have gone up, it's imperiled by the fact that we were a port city for all types of freight, and now we're only a commodity port. That's a big deal.
Josh, can I follow up on something that Steve asked? When we look at the rising rents and we're looking at the kind of rental housing that is being fueled right now with a lot of out-of-state money coming in here chasing pretty significant returns, you end up often hearing the same debate recycled. On the one side, you have people who say who blame government and say that with the urban growth boundary and with the regulatory costs that we impose, it's no wonder that house rental costs are going up because we've in a sense, artificially created scarcity through the urban growth boundary, and regulatory costs, of course, have to be passed on to the consumer, the argument goes. The other side that you hear is that we're in this unique moment where capital is chasing high returns in rental investments. We lie between two cities that have higher cost structures, and so it was inevitable that capital was going to find us and come in and say we can boost prices and make some money. So as between the heavy hand of government argument and market forces largely beyond our control, where do you come down as on the question of what's been the most significant factor driving the rising costs and rents?
That feels like a loaded question, and maybe my answer will be self-serving. But no, it's. I think over the long term, the first is a big influence. So the urban growth boundary, not within the city of Portland, it's not influencing the city of Portland. We're talking about on the whole metro area wide. Absolutely, there's more density than there would otherwise be. You just have to go to a lot of other cities in the country, especially in the Midwest, and you can take an hour and a half to drive through Houston at 60 miles an hour. It just keeps sprawling out. And so metro area wide. In the short term, I think it's much more the latter. We're seeing them chasing large investors chasing returns, but they're chasing it. I don't know that it was inevitable. That's the one thing I would say. The reason they're chasing returns is because Portland's been a good place to live. It's a better place than it was 30 years ago, and the reality is it's much more comparable to Seattle and San Francisco as from a quality of life standpoint than it probably used to be. The other thing that you'll see is and not unlike how parts of Portland are different than they were 30 years ago, and you've seen returns being chased in some of those areas. And so I think in the short term, it's much more the investor fueled looking for a return. In the long term, it's much more of a concern about regulatory practices and increasing costs on the front end. Okay, I'm going to wrap up here pretty quick. So just some other indicators, you can read them. Just some interesting tidbits that when we grab the data, not wholly unexpected. like mentioned, we're getting a lot of young couples, married or unmarried. A lot of people need roommates to afford where to live. We have the fourth highest proportion of households that live with non-relatives. We've got a lot of self-employment. That highlights two things. One, it's a creative economy. Two, it's an economy that people want to live in. So those people that have choices about where to live, this is one of the places they choose. And we're a high-tech city, getting more high-tech by the day as I read. So we got very high end of broadband. That speaks to the newness of Portland as well, relative to the other cities around the country. Just a thing that economists love to pound home: education is the biggest long-term driver of capital accumulation, of income drivers, of all these things. We are now the 9th, I believe, highest concentration of percentage of the population with a bachelor's degree. But we were the second fastest growing over the last 5 years, so we're climbing up that list. Again, just another piece of evidence about where we are and the type of individuals that we're importing.
And I was going to say, Josh, because am I right, though, that the local numbers of students getting bachelor's degrees are lower than this total? So this is actually reflective of that displacement
Absolutely.
Dynamic you've been talking about. These are people, these people are moving here with their bachelor's degrees.
Absolutely. Finally, just the things, just to summarize, the dynamics are changing pretty rapidly. I think that's part of the driver of the urgency that we're seeing and the nervousness. The city's been changing for a long time. We've been moving in this direction for a while, with a few hiccups because of the recession, those other things. We've been moving in this direction a while, but it's really picked up in the last 12, 18 months. And so it's the rapidness with which we're seeing these changes occurring, and I think is driving a lot of the uneasiness. Again, housing is taking off. Housing is also, like politics, location. So there's a portion of the city that's doing a lot better than another portion of the city. And again, we've got very, very low inflation, although we're seeing some medical inflation picking up a little bit in the near term. I don't know that that's going to be sustained, but that's sort of the picture as we see it right now. Happy to answer any more questions, or we can.
Josh, if I could say. Sorry.
I was admonished by Chris Smith recently, who watched a work session, and Chris, get a life, on TV. And he said that when we didn't push the button, he couldn't hear it, and there was no text. So anything you had to say actually went into the ether. So he admonished me that we have to talk with the button on.
And I wouldn't want to be in your category, so so just for him. I'm reading a lot of. Being retired, I read a lot of economic and financial magazines. It's pretty exciting. And I'm reading more and more about some economists who are predicting a recession within the next 24 months. I don't know if that's true or not, and who knows. First of all, I'd like to know where you stand on that. Second of all, if it ends up being true, then a lot of things concern me about the city because we tend to suffer more during whether it's hiring new employees for the city or the house next door going unrented and going into disrepair, et cetera, et cetera. What's your feeling about that?
I should preface it by saying the joke is that economists have called 9 of the last 2 recessions. So there's a lot of there's always going to be people on that side of the spectrum. I would say that saying that, the growth that's which we're seeing right now does make me a little nervous. We're sort of building up the cliff. It's not going to be a cliff, but building up the mountain. So we're making it a little higher. It's a little easy. So we have the potential to fall further. That having been said, I don't see it in the next 24 months. We are 6.5 years into this economic expansion, so we're getting to the point where we're going to get a little bit nervous. We'll talk a little bit more during the budget session when we look forward about sort of how it works internally within the city and how that dynamic might be more of a problem. But no, I think in the medium, the short term in particular, but even the medium term, we're probably not too susceptible to it. And I don't think there's a recency bias too. I don't think the next recession is going to look like the last one, especially in terms of depth. We don't have the same overhang of investments and sort of internal financial works. Yeah.
Josh, I have a big picture question about housing affordability. That actually, there's something I've been saying that I kind of assume is obvious, but I should check with an actual economist. It seems to me that the rapid increase in housing prices here, which is outstripping, the rising incomes for most people here, is in large part a reflection of the widespread economic inequality we have in the country, where Portland is an attractive city to a lot of people, including rich people. So rich people are moving here. But if the rich people weren't so much richer than everybody else, then their ability to bid up prices far beyond the scope of most people would be more limited. I mean, do you think that it would be accurate to say that if we had a more equal distribution of wealth and income in the country, then it would be less likely that you have housing prices soaring out of reach of average Portlanders?
Yeah, I think there's a couple aspects to that. But broadly, absolutely, that's correct. The other one part of having this investor sort of driven housing market or parts of the housing market is that they can pay cash. They can come in. I mean, it's a different sort of transaction. And so even if another buyer can afford a home under our traditional home buying system, they get priced out just on the structure. The other thing that I would say is that part of what you're seeing is really a inside of 82nd phenomenon in a lot of ways, which speaks a little bit to the dynamic that we can't look at housing in a vacuum. We have to look at it in terms of housing and transportation costs, because I think a lot of people are making that calculus, which is why you're seeing a couple big buildings going up on the east side of the Burnside Bridge, all that stuff on Division, even the Pearl. It becomes a desire. When people make the calculus of, well, I don't need a car if I live here, then that changes the whole cost dynamic too. So we can't kind of look at housing just in a vacuum.
The institutional investors are buying because they think there'll be enough people with money to rent the places they're buying, right?
Sure, absolutely.
I think this is anecdotal from what I've heard from people in the real estate world. I think those institutional investors, however, are concentrating on low to mid-price housing, not the highest price housing, which exacerbates the problem. Because if working people are struggling to be able to buy a house, they're being outbid, not people in the most expensive neighborhoods. I think that's what's going on.
No, that's absolutely true, and that should have been part of what I was saying. Is that's what's happening? Is that even people who would buy a starter home or buy, even probably a little bit above a starter home for some people, they can qualify for the mortgage. It's not a problem. They've got close to a significant down payment. They're getting priced out because the transaction is more appealing for the seller. I've gotten letters in my house, no transaction costs. We'll do cash, kind of thing. And if you're going to sell your house, that if you don't have to pay transaction costs and you don't have to go through a broker.
Josh's excellent presentation as always. I think I'd just put a footnote in maybe for the next time we do this. One more indicator that I think it would be useful for us to track. It's more of it's a social indicator, not an economic one, but I think it feeds into some of the questions about what's happening to us socially and economically, and that would be what's happening to enrollment in the public school districts in the city. It's going up, but how much and compared to before? And I think it would be useful to see that, because that gets to the question of, who's buying those houses, who's renting those units, are they staying in the city or are they planning to? It just seems to me that if we look at school district enrollment, it will help us see a little more clearly that bigger picture. Other questions for Josh before we move on into performance management? So, great. Thank you very much. Well done. Thanks,
Josh. So now we're going to, again, move into performance management. We're going to talk a little bit about sort of what is currently happening in this world with the dashboards, and then how we're going to be integrating the performance data into your budget decision-making process as we go into this, into the 16-17 budget process. Shannon Carney is here to walk us through that, our performance management analyst.
All right. Thanks, Andrew. Try to make sure I've pressed the button here. So, Like Andrew said, I'm Shannon Carney, and I'm the performance management analyst for the city budget office. Is this on? Okay, good. So I feel like one thing I should get out of the way right away is that I am a renter. So full disclosure. Hopefully that's proof that we're not all bad. But here we go. So I do want to talk about performance management today. So a couple things I want to highlight is just that there's a lot of performance happening around the country, and Portland is a part of that. So Josh has shown us how Portland stacks up against comparable cities, and I think we stack up well in terms of our performance management efforts as well. Second is just pivoting to how we can use performance data as we go through the budget process this year and beyond. So feel free to jump in with questions. I know this is an exciting topic. So performance management, performance is definitely trending, and the city of Portland is part of that. So, as a brief stint of history, I'm sure you all recall that it was just 2 years ago that we started working on priority setting and determined the priorities of complete neighborhoods, housing and homelessness, and emergency preparedness, and have been tracking and reporting on those priorities. Last year, we adopted our key performance measures across all the bureaus. And those are the measures that represent the outcomes of our bureau's core programs and services. This year, we're going to be looking at setting targets, both fiscal year and strategic targets, to make that reporting system even more useful. So these actions have definitely established us as a leader amongst cities in the country, but we're by no means the only city that has a performance dashboard that we're regularly updating. Cities like LA, Houston, Atlanta, Boston, Seattle, there were others, but I won't list them all, are doing this as well. So what's driving the interest in performance dashboards? And excuse me for the pun there. So I would say the greater availability of data. So we all know that there's more data available to us all the time. We have a choice of either being bogged down by that data or using it to our advantage to be able to make better budget decisions or better policy decisions. There's an increased, I would say, public awareness of open data sources. I think the vendor payment system that we launched, that the city launched in June, is just one example of that, how people can use the scale of government data to make their own discoveries and to hold government accountable. And of course, thankfully, with all this data, there have been some amazing advances in technology to be able to manage and visualize the information that we have. So here at the Budget Office, we're using Tableau software. There's lots of other software applications that help us take what used to just be presented in a spreadsheet or numbers, which isn't very visually appealing, and put that into a visualization that people can actually interact with.
So I'm going to take the opportunity to plug a comp plan policy that will be before you, which is an open data policy that would encourage the city to make the raw data behind these performance indicators available to the community so the community can crunch them and reach their own insights and do innovative things with them. So.
Yes, and that's a big advantage for us. So what are some recent milestones for the city? So obviously there's a lot going on around performance management. One of the big things that we did earlier this year with launch of the mayor's performance dashboards. And this is if you haven't been to the mayor's performance dashboards, I have to give a plug for this. It pulls together a number of measures across our city's most important priorities, puts them together with regional metrics to give a more complete picture of how we're doing as a city. And those were updated earlier this summer. Representatives from the city actually got together with some people from Multnomah County, and we gave a pretty well-attended presentation, I have to say, for a lunch hour in mid-July. Might have been on a Friday. We actually got a large number of people from the city together to listen and hear about how we're using data visualization techniques to work with complex data sets. So we did that earlier this summer. City Budget Office worked with TRIMA to give a presentation at the Tax Supervising and Conservation Committee. And of course, the vendor payment checkbook, as I mentioned, budget maps. So that's something that we're continuing to update. And those, just as a reminder, show how we've spent our capital and operating budgets, as well as our level of service for some of our city's biggest bureaus. Something to look forward to is we're actually going to pull all the budget maps together into a visualization, so you can scroll through and see how things have changed over the years, and also how things compare amongst bureaus. So stay tuned for that.
I'd be really interested in having a full presentation on that specific topic.
Great. Make a note of that. So that's kind of what's happening, just citywide milestones. But there's essentially a performance wave, I would say, happening both in the city and through our regional partners. So two of the squares here kind of show what TriMet and Multnomah County are doing. Some really impressive stuff. TriMet actually has a dashboard that they update monthly with some of their more important metrics. And Multnomah County's Auditor's Office actually presents some of their reports through data visualization. So this is the pay equity report that got quite a bit of press. And then, of course, there's a lot happening in the bureaus. So it's not just citywide. And these are just two of the bureaus. I don't want to leave anybody out. But Portland Parks and Recreation has been doing a lot of performance, has been incorporating performance data for quite a few years now into their comprehensive annual report, and using it for internal management. And then we've all seen the Portland Bureau of Transportation Vision Zero crash map, which is updated daily. So pretty impressive stuff. So I think this begs the question, with all this data at our fingertips, how can we use this data to inform budget decisions moving forward? And hopefully this circle here will give us a little bit of a clue. So I just wanted to talk about where we are in the performance and budget cycle. I'm sure you're all very familiar with the outside of the circle, which shows the steps in the budget cycle. So right now we're at the fall bump, for example. I want to talk a little bit about what we have on the inside of the circle, which is what we call the performance cycle, and how these steps complement the steps in the budget cycle. So, like I said, right now, we're here at the fall bump. This is also the time when bureaus report their performance data to the budget office. The next step for that, after the bump is over, a city budget office analyst will actually use this information, analyze it, and present it to you in the prior year report. So that's when we evaluate bureau performance for the past year. That information can be used to, as you work on your requested budget decision packages and assess budget decisions in 16-17, excuse me. Steps after that, we continue with performance reporting. Bureaus actually have an opportunity to update their performance projections with the spring budget monitoring process. And that's also, again, a point where City Budget Office analysts will be using performance data to help us write reviews and make recommendations in the spring bump. Finally, we'll actually be adopting both fiscal year and strategic targets for our key performance measures with the adopted budget. I won't go around the circle again. I don't want to cause any dizziness. So, yes. So given all that, so we have quite a bit of information to share with you, and we wanted to just talk, give some examples of how that might be used to assess the results of our major investments over the last few years. So these will look pretty familiar. We've had some significant investments in transportation. Clearly, some dollars towards the parks replacement through the bond. Our major maintenance policy has helped us invest quite a bit of funding towards those infrastructure projects. And then, of course, housing is a potential investment for this year's fall bump. So this is meant to be a little bit of a look back, but also look forward. So when you're thinking about these major investments, we can actually use these key performance measures that we already are reporting on to see how the investments are working, so if we can see those impacts. For example, in terms of parks, two key performance measures that are highly relevant are the Parks Facility Condition Index listed there. So we'd expect to see that continue to rise in 15-16. And then, of course, the percentage of residents that are rating the overall quality of our parks and recreation facilities as good or very good. And so that's information that comes from the Auditor's Community Survey. So ideally, we'd like to see that rise as well. So those are just two examples, and there's others listed on our performance dashboards. So next slide. So again, looking forward.
Interrupt a minute, because
I'm
not
go
sure
ahead.
we would see the parks facilities continue to rise. It depends on whether the amount of money we have is greater than the deterioration, and I'm not sure that it is. I think it merely fixes the worst, it patches the worst holes, but I don't know that it gets us ahead of the game.
Okay. And
The condition index is supposed to capture.
Right, but I don't know whether we would expect it to continue to rise as a result of the Parks
Yeah.
bond, because if we still don't have enough to keep up,
right.
so that we'd need to have a further analysis of, where are we at on that spectrum.
To be able to understand that.
So,
Sure.
so even if it went down, that wouldn't necessarily mean that the Parks bond was a bad thing.
Right.
Because it might have gone down even worse.
Yeah, that's right. And
Makes
I
sense.
think as we talk about this data, I mean, the more robust this system is, the more fine-tuned we can be in terms of measuring that. It would, had we sort of had again that fine-tuning, maybe you were already seeing a decline of a certain rate, and you could see then the parks replacement bond slowing that decline. So it may not raise it, but it would hopefully still be having that positive impact. And I think that's what we're trying to get at, is that we can actually show what that impact is, and make sure that it's achieving what we expected it to achieve.
So looking forward, we have some upcoming budget issues that are on the table. So things like housing investments, potentially background investigators, some issues around parks, firefighters. So we can think about how to use our existing key performance measures to evaluate, where to put these investments and what kinds of outcomes we're trying to see. So there's some examples right here of the housing measures that we have right now. Housing units open, and these are off of the Housing Bureau's dashboard. So housing units open that are newly affordable, and then percentage of households that have moved from homelessness into housing. That's kind of a recidivism, capturing recidivism, and then retention rates of households that are placed in permanent housing at 12 months. So I wanted to, so this is going to be a little bit harder for council to see, but I did want to take this opportunity to navigate to our performance dashboards and see if I can, just to show you, this is a little bit more exciting than just looking on a slide. But these are actually live right now. So we've been working hard to update our online dashboards with the prior year actuals. So our results from fiscal year 14-15. So this is right off of the portlandoregon.gov/CBO website on the performance tab. And what you'll see is this wheel with the different bureaus' logos, and you can click on one of the, so I'm going to click on Housing Bureau since that's sort of what I was talking about. So you can actually click here, and that'll pull up the Housing Bureau's dashboard. And that's the case with all the other bureaus. So you can either do a sort of assess at a glance and see how things are going, look through, see what the key performance measures are. Those are what are listed on the rows. And then this gives you a brief glance at comparing historically, so fiscal year 12-13, up through the goals that we have for this coming year. And then these trend arrows actually indicate, they indicate the trend that we're seeing from the 13-14 actuals to the 14-15 actuals. So the last 2 years of actuals that we have indicating that trend. So if you click here, this is the fun part, then you can actually, it's a couple layers here, but you can just look at the bureau that you're interested in, and again, view those measures. And then when you click on each one of the measures, this is kind of fun. This gets beyond just seeing the percentages or numbers and actually visualizes the information. So we'll see if it happens. Anyway.
Is this all available at the CBO
Yeah,
webpage?
exactly. Yeah. So this is portlandoregon.gov/CBO. Might be having a little bit of a Wi-Fi issue here, but if you can, I can leave it up there for a second. But basically the idea is that it pulls up the key performance measure and actually shows the visualization of that. And it distinguishes between the actuals that we have, so seeing the trends from 12-13, 13-14, and so forth, and then distinguishes those from the targets that the bureaus have set for that key performance measure, the fiscal year
Shannon,
target.
there's some additional drill downs on some of those as well, right? Some pop-up screens that sort of give a little bit more explanation about the measures.
Exactly. So if you're looking for more information, you can hover over. So if you hover over the trend line here, it'll give you a little bit of information about how the comparison and how that's trending. This question mark here talks about, gives a little bit more information. You can actually download how to interpret the performance. So that's the one pager that you saw last year during the work sessions that shows how to actually interpret those measures. And then you can even download the data sources and the KPM methodology appendix if you want even more information. So we've actually seen some pretty good download data from just the people looking for the underlying data set beneath the measures. That's kind of exciting to see. So where do we take all of this? I think it's a pretty exciting time to be able to utilize performance information. And there's a few things that we're hoping that you'll get involved with over the course of this year. The first is that City Budget Office is going to be working with bureaus to establish targets, both fiscal year targets, which we already have for our key performance measures, but refining those and identifying if those are the right targets. But we also want to work with bureaus to set strategic targets. So what are the aspirational goals? What do we really want to see out of this, out of these policies? And that's where we can pull in things like the Portland Plan and the other strategic initiatives that we have as a city, and bring those into our performance management system. So secondly, we're hoping that you use this data to inform decisions. So performance management isn't always a happy story. Sometimes there's lagging outcomes or there's results that we're not hoping to see. So using that information to understand if there's a need to change an approach in a bureau or maybe a need to redirect resources. Maybe it's a matter of coordinating and problem solving across bureaus. And finally, hoping that we can use performance data together to communicate outcomes. So as I said initially, this is something that a lot of the cities that we compare to are doing now, really trying to change the conversation from how much we're spending on different programs and services to what we're trying to get out of those for everyone that lives, works, and plays here in Portland. So, thank you.
Thanks, Shannon. Thank you.
Shannon and Andrew, I applaud your work in managing data. There's been an explosion of data in our society, and I'm not sure it's brought greater clarity in anything. So how we harvest data and how we communicate data is very important. But let me pose a challenge and just get your feedback. We have worked collectively to come up with some dashboards and some indicators. And the question that I often have is, are those indicators relevant to the people we serve? So I'll give you an example. There are two dashboards in the utilities that I lead that are pretty meaningful. One is, do we continue to have a AAA credit rating? And the second is, are our response times under 2 minutes? So we've decided collectively these are very important. I have never had a citizen ever raise either issue with me. Instead, what I hear from, in terms of people who are measuring my performance, our collective performance, what I hear is, are rates going up? Will I be paying more? And that's a fair question. I mean, that's as real as it gets. Are you raising rates, and will it impact my bottom line? So I guess the question I have, how do we ensure that this laudable exercise in creating benchmarks and dashboards and managing data is actually relevant to the people we serve? And how do we what is the mechanism to tie it dynamically to what people actually care about? Because I fear that with this explosion in data in our society generally and the ease of access to the internet, that we're potentially overwhelming people with data and information, but I don't know that it necessarily is leading to greater clarity of purpose in terms of how we govern or how we make decisions. And just wanted your reaction to that.
Yeah, no, I think it's a really excellent point, and I think the performance measures that we're tracking need to both be tracking what's important from a city operations standpoint, but also tracking what's important to citizens. And I haven't looked at those two. I try and look at all the dashboards every day, but I haven't looked at the water and BS. But I'm pretty sure that at least one of those bureaus actually does have an affordability measure that they're tracking in terms of how much that bill is, but I'm not sure that both of them do. But I think that's really what we're looking for from you all, is that feedback. What are the things that you're hearing that we should be tracking so that you have a data point to go back to? So when you get that call that says, my utility bill's too expensive, you can point back and say, well, let's or you can point someone to the dashboard and it says, this is what's happening. This is what has happened over the last few years, and this is what our target is in the future. So at least the conversation is not, it's specific around what's happening.
Yeah, and I guess the ongoing challenge is for most of the people we serve, their view of the data is normally part of a narrative and a set of stories. So, for example, I've been watching Commissioner Novick closely and studying his every move, and I realize now that if I put resilience into the same sentence with any budget ask, it gets a greater positive reaction than if I don't. So almost everything we're going to be presenting to council this fall is part of a overall resiliency plan. But seriously, I agree with something you said earlier that very much, which is at the end of the day, people don't look at the data points necessarily in the abstract. They want to know where they're getting good value. And so one of our challenges is how do we tell that story that what we are delivering to the public gives good value? And so in the utilities, we say high quality, reliable, right? We talk about those values, and then we say, and at a fair price. You can make your judgment, but the people aren't going to make their judgment about price by looking at comparative data in every city in the country or going to logarithms. They're going to say, am I getting high quality, reliable, safe water? And if so, I'm willing to pay for it as long as it remains that way. So I just, and I actually think that some of the dashboard stuff that's evolved over time has become more useful. But I would just challenge us to always go back to this question. Is it a data point that resonates with us, or is it a data point and a benchmark that resonates with the people we serve? And if there's a delta, how do we close that delta? Because ultimately we want people to see these benchmarks and say, I have confidence in my government or not. And less so, I think, just aggregation of lots of interesting data. Because frankly, I think I'm fairly typical in this regard. I feel overwhelmed by data. In fact, data is no longer really my friend because there's so much of it. It's a full-time job just to manage it. I'm looking for clarity. And data hasn't brought us more enlightenment in government. Data hasn't brought us more, collegial behavior in the Congress. Data is just overwhelming people. So how do we make sure our data is relevant to the people we serve?
Well, I think those are really good questions, and we're all trying to feel through that, that passageway between where people used to know more than they apparently know now about what their government's doing. One thing we can all do, which we may already be doing well or we can improve on, and that is if our front desk folks in each of our offices, if the staffs in our offices who are responding to citizen questions, if folks at the INR information and referral line are sending people to these dashboards saying, if you really want to know what's going on in the Water Bureau, check out this site. I think that will allow us to get more feedback about whether citizens are finding this useful or not. So we can probably all up our game in terms of sending people to this resource, and then we'll hear, I bet, at least anecdotally, about whether people, do they find it useful? Is it giving them clarity? Is it credible to them? So I think we ought to carry on and intensify that connection effort to connect people to this resource and then evaluate how well it's working.
Great. Yeah, I think those are great points too. And I especially agree with that, we want these measures to resonate with the public and that we're looking to your feedback to make sure that we have that right mix of high level outcome measures that make sense for the bureaus, but also that are simple enough and interesting enough to the public that it's something that people will pay attention to and use. I would say that, I've been here about a year and a half, but City of Portland is definitely a complex organization. So I think, we can't get away from having to use data and information and complex data at that and having to distill that to be able to manage our operations better. So
just on that point, I had lunch last week with a good friend, longtime supporter. We've had many conversations about government. This person's never shy about offering me critical advice. And about somewhere in the middle of the meal, he turned to me and said, now, would you remind me, do you work for the county or the city? And, one of the things that keeps us humble in these jobs is that many of the people we serve have very busy lives, and our day-to-day work is not directly on their radar. Struggling to survive, raising a family, managing their lives comes first. And so I think that goes back to this point about being really super strategic and focused about what information we put up there as being marquee data and how we talk about it, and then moving beyond just data and telling the story about why that information shows something, either progress or not, and trying to communicate with constituents who have very busy, chaotic lives, and sometimes our work is the least important part of their life.
This is a complete tangent, but Commissioner, I've got a book somewhere called What Americans Know About Politics and Why It Matters, and one of the factoids in there is that the only position on an issue that any politician has ever taken, which more than 90% of Americans were aware of, was the fact that George H.W. Bush did not like broccoli. So maybe there's, an indication in there that if somehow we tie data to broccoli, people will remember it.
Shannon,
That one in
thank
mind.
you. Very, very good work, and appreciate the leadership in your office to make us a leader in this idea of giving people this kind of information this way. So thank you.
So using this to transition a little bit back into sort of forecast and budget issues, and really how we're how we're going to integrate performance into that. If we go back to the slides here, just make sure I know which way I'm going. There we go. So one of the things that we did recently in the budget office is we did what's known as a Kaizen event. And for those who are familiar with lean process management, this has been around for a long time in the private sector, and even in the public sector, it's been adopted for many years. But it's not something that the city's done a whole lot of. And lean process management, the whole idea is taking the processes we have, really breaking them down into their component parts, and analyzing where we can get more efficiencies. And we've been sort of talking about this for a while, and decided to go ahead and put it into practice around the budget process. And so what we did is we actually applied for an innovation grant and got a $7,500 innovation grant to run what I believe is the city's first Kaizen event. And we held that event just a couple months ago. It was over 2 days. We had 26 participants from throughout the city, including a couple from council offices, which I really appreciated. And it resulted in 34 action items around the budget process and ways that we can improve this process to make it work better, both for the bureaus, for council offices, and also hopefully for citizens. And so you can see here, we've just listed those, and I won't spend a lot of time on these, but I wanted to highlight this process again. I think it shows how we can begin to integrate this into some of the day-to-day things we do. And what I'm actually hoping, and we had two motives here. One was to improve the budget process, but the second motive was to get some key bureau people in the room to see how an event like this might work, so that they could go back to their bureaus and talk to their directors, and think about processes that they have that a similar system might work. And again, we had a $7,500 grant, but I would say I don't think that's necessary. Our consultants were very good and they really helped us. The more of these the city does, though, the more in-house expertise we're going to have, and I think we can begin to run these types of events just using existing city staff. So really quickly, just to talk about some of those things that you're going to be seeing from our office, and that we may be asking you for as well, that came out of this, some of the action items that came out. In terms of the city budget office and bureau collaboration, really making sure that we're continuing the field work and the ride-alongs that the analysts do, so they can understand what's going on in the bureaus and the programs that they're analyzing. Identifying opportunities for bureau and city budget office staff to work together on joint projects. We have done that on some occasions, and I think it's really worked well on both sides to get some additional understanding. So we're going to look for more of those opportunities. And then improving the analyst transition process. Unfortunately, I have really good analysts who sometimes get picked off, often by the bureaus themselves. And so when we have to transition, just making sure that transition from a bureau perspective goes really smoothly. council direction, two of the things that we heard is that bureaus really want to get budget guidance earlier in the process, and we'll continue to work with the mayor and council on that as they start their budget processes in the fall and trying to get that budget guidance out as early as we can. And we'll be talking about that in just a few minutes. And then agreeing on minimum consistent priorities. Again, the bureau staff in the room were very clear that it's extremely helpful for them when they hear from council what those priorities are going into the next budget cycle. So as they go through their processes, they can take those into account. In terms of budget process design, again, this is getting pretty specific, but there's always a really quick turnaround time after the mayor's proposed budget when bureaus have to balance and they're really looking for a little bit more time. Again, that's more of a technical back-end thing, but it's dozens of hours of work that bureau financial staff have to do in a very short period of time. And then also scaling the bureau work sessions based on council questions. There's a lot of conversation about how to make those council budget work sessions more relevant. We've got a couple ideas later on in this presentation to talk about there as well. And then finally, around improving the public process, again, some of the recommendations or action items coming out were to clarify what the expected outcomes of our public process are. We always talk about a public process and we engage in a pretty robust public process, but what are we trying to get at? What is that outcome we're after? Revisiting the BAC structure and requirements, specifically whether they should be different for different bureaus. We've heard a lot about large bureaus and their ability to manage BACs versus very small bureaus and their ability. And we currently have a consistent set of BAC guidelines. These are budget advisory committees for bureaus. We have a consistent set for all bureaus, and there was some conversation about whether we should make some allowances.
Andrew, since this is the first full budget cycle where we're going to have a new oversight body for the utilities, as you build in the calendar and look at the timeline, have you penciled in the key milestones for bringing the pub into the budget process?
That is an ongoing conversation with the pub, and yes, it is definitely high on the radar in terms of exactly at what points they'll be participating. And then finally exploring.
Excuse me, are you working with the Public Involvement Advisory Council to update the BAC guidelines?
We have, yeah. We've been talking to them, and I think I'm going, to next month's meeting to have that conversation again, and really bringing this feedback from the bureaus back to the PIAC so that they can sort of take that into account and think about revisions. And then finally exploring alternative tools for enhancing public engagement. I mean, as everyone knows, there's huge social media potential, which doesn't necessarily reach everybody, but I think there is some more that the city can be doing in that regard.
And similarly, that we should be exploring more ways to get to non-English speaking communities and those who don't use social media. I think there's, at both ends of the spectrum, there's ways that we can engage more folks.
Andrew, I've been involved in Kaizen, Lean, and Six Sigma for 20 years in the private sector. I just want to congratulate you and thank you for your leadership. To me, this is a huge step forward. I think you're going to see a lot of changes for the better. And I think one of the things that you may not think about, but that I saw in the private sector, is buy-in from people who are involved, because they believe their voice is being heard, and they are, and they're actually making changes. So I just want to thank you for your leadership.
It was really interesting. It was my first one that I had sat through, and again, everyone's a little reluctant to give up 2 days. It's a long time, and yet at the end, the feedback was almost universally positive. And even the people who had real concerns with the process, again, they felt like, hey, we have some good action items we can move forward on. So, and I would encourage you during the budget work sessions to be asking bureau directors if they've considered sort of doing a Kaizen event around particular processes. Because I think incorporating this into how we do business, cities that have done that have seen some real successes. So I'm going to move on here to forecast, preview, and budget issues. There we go. And Josh and I are going to sort of go back and forth on this one. But again, we've talked. Josh has talked about the overall economic outlook, and what this slide shows is the record revenue growth. I'm actually going to let Josh talk about it a little bit. Yeah.
Yeah, that's fine. I think the one thing to note, there's two graphs here. The one on the left, the property tax revenue growth, includes 15-16. We got property tax data about 2 weeks ago. It's looking like it's going to be a record except for last year in terms of property tax revenue growth. So property tax revenue typically is between 3 and 5% on a given year. We're seeing more compression unwind. We're having lots of new construction. So we're getting a lot more value on the tax rolls. So property tax revenue growth is the two fastest years of growth since Measure 50 went into place have been last year and this year. The one on the right just goes through the end of last year. That's business license tax and transient lodging growth collections. We already talked about transient lodging growth collections earlier. Again, a record there. Business license taxes went up more than 20% off of a record to get to where we are in 14-15. So when we're thinking about this in terms of a forecasting spectrum, all of that growth has been built into the forecast. We need growth on top of it in order to see money available for ongoing and one time. So in terms of, and we have some relatively modest growth targets for business license taxes in particular because of that overhang I talked about before. That kind of jump makes me a little nervous because, transient lodging taxes have doubled in 5 years. Business license taxes have almost doubled in 5 years. We're getting a little bit, faster growth than is sustainable. And so we need more growth in order to see, to meet other priorities that we'll talk about here in just a minute.
So record revenue growth, but some concerns around sort of where we're headed on that. There are a couple slides here we've included about price of local government. We didn't know exactly where to put them, so we sort of just dropped them in here. But I thought it was really interesting. Josh, just very quickly, and I'm not even sure this is a fully comprehensive list, but we just went back to 2010 to sort of look at what's been happening, not just from the city of Portland, but other jurisdictions in the metro area as well. And a couple of these are statewide things that are again sort of increasing the tax burden on our citizens. And if you go back to 2010, you can see there was Measure 66 and 67, which again increased the income tax rate on high-income individuals and businesses. There was a gas tax increase of 6 cents. There was a City of Portland public safety bond measure of about $72 million. There was the Oregon Historical Society local option levy on the ballot that year, and then also that was the year that the city established the leaf fee. Moving forward to 2011, Portland Public Schools increased local option levy passed. And then in 2012 was another big year with Multnomah County Library District passing, and as you'll recall, that shifted about $10 million from the city general fund over to the county and the library district. That was the same year that the Portland Arts Tax was established, and also where Portland Public Schools passed the $542 million construction bond. And then moving on to 2013, that was the year the Metro's open space local option levy passed, and then the children's levy was renewed, although again, to note, there was no increase. That was just a continuation of the existing tax. And then in 2014, similarly, the Parks bond was renewed, again, which was an expiring bond, so it was not an increase, but it did continue at that level. And then we know that TriMet's been authorized recently to increase payroll taxes over the next 10 years. And, the reason why we bring this up, because as the city talks about our funding needs, and we know those funding needs are significant, we've had a really robust conversation around streets and the need for significant new revenue there, and the possibility of a gas tax. We've talked about housing funding and the needing to find more funding for that. We've talked about, probably more generically than specifically, about the need for future parks bonds to keep up with some of those issues. I think there's an overarching question in terms of where is the limit of Portland taxpayers. And one of the things that we're going to try and dive into over this next year is a little bit of that comparative research. And this is really hard to get at because every jurisdiction is very different. Every taxing strategy is very different, both local and state. But the question is, can we sort of look at other comparable cities and get a little bit of a sense of what our tax burden is, and a little bit of a sense of are we close to that limit, or is there again a little bit of room there? And one of the things that I think we've shown in the past is even with measures 5 and 50, which were significantly limited our property taxes to what they would have been otherwise. If you look over the last 20 years, our property taxes have still grown at about a 3.8% compound rate, which is slightly above inflation. So even with those limitations, our property taxes have grown a little bit higher than inflation, which I think says that had we not had those limitations, there probably would have been some other limitations. I don't think the property tax system that was in place would have remained untouched absent those things. And so again, I think this is sort of that big picture question, and it doesn't just involve us, but it involves the county, and it involves TriMet, it involves Metro, and it involves the state, and really thinking about where we are in terms of that comparable tax burden.
Two things. One, it strikes me that water and sewer rates are surprisingly absent from this, and I would think that the increase in water and sewer rates would be a bigger factor for households than some of the other things that you have here. The other thing, as far as the property taxes since Measure 5 and Measure 50, Measure 50 in particular has had a different impact on different parts of the city. It's basically had no impact on East Portland because they're all paying the maximum they're supposed to pay under Measure 5. It's had a dramatic impact on the recently gentrified areas of the Inner East Side, where people who are buying some pretty expensive houses are paying taxes as if they were worth a lot less. So overall, we might have property taxes growing by 3.8%, but in parts of the city, you don't have them growing by anywhere near as much as the increase in housing values and the incomes of the people with the houses.
Moving on to the next slide then. So the next slide, again, we're trying to sort of cover some of these big issues as we go in and talk about the forecast. But Josh put together some information about personnel costs. And we've talked to you before about this, but just wanted to sort of reiterate the structural issues and challenges that personnel costs are with the city.
Yeah, so just so picture we're in 2004, 2005. We're hiring an individual at the low end of our pay scale in each of these categories. And these are pretty highly populated categories in the city. It's not comprehensive. It was just a snapshot. Certainly general fund, firefighter, and police officers, we pay, there's a lot of those. So picture you hire them in 2004, 2005. And then and they stay in that job for 10 years. So these same people were there 10 years later. This is how much their wages would increase. That's what the graph shows, relative to the bar on the far right, which is what our general fund grew by, generally speaking. And so it's just, and again, this is just wages. Looking to the future and even probably somewhat into the past, PERS rates will redouble this chart and make it, because the PERS rates won't change the revenue side, but they'll change the other positional costs. Yeah.
Josh, last year, we talked about the fact that there was going to be a substantial amount of turnover in the workforce, that we're looking over the next 10 years to have a lot of senior, experienced people turn over and be replaced by new employees. So how does that dynamic that we talked about last year impact your projections under this structural issue?
Frankly, that happening in the past is the only reason we have a lot fewer employees now than we did 10 years ago. So that dynamic takes place both in the past and we have roughly the same number of employees that we had 10 years ago. And so even with the growth in the general fund, we're not hiring more employees because we can't, because we still have some pressures.
Yeah, but my point is with a lot of experienced senior employees contemplating retirement in the next 5 to 10 years, we're going to be replacing them with junior employees at a much lower cost. So how does that impact the aggregate numbers?
Yeah, I think it impacts the aggregate numbers exactly as you would describe, and that it makes our budget more sustainable. But it only does that in the short term, because again, each position in that low end is going to grow. Their salaries are going to grow much more rapidly than our general fund generally will grow.
So if I can just have you make sure I understand this graph. Taking firefighter, for instance, in the last 10 years, the wages have increased 120% or 12% a year? I don't understand that.
It's actually, yes. If you started at the low end of the pay scale and 10 years later you're at the high end of the pay scale, yes. And that's happened through a variety of things. It's happened through cost of living increases, it's happened through merit increases, theoretically, and it would have happened through collective bargaining. But yes.
And it's also total compensation, so PERS.
No, it's not. This is just wages.
Just salary, sorry.
Does it include overtime?
No, it does not. We're plain.
Counterintuitive. I mean, the city, we have not increased the scale for an entry-level position by anywhere near this much, right? Under the bargaining agreements and the budgets that the council's adopted, right? The entry-level pay of a police officer was $45,000, and now it's $65,000 or something like that.
We have raised it higher than general cost of living, though.
Right.
Through collective bargaining. So this is a combination of, yes, absolutely. This is a combination of of, again, cost of living increases, an individual moving up the pay scale because it started at the beginning, at the end, and collective bargaining. So.
And, getting back to the Commissioner Fish, your question about people leaving, there is a significant risk of a lot of people leaving. I haven't looked at sort of the data for the last year, but I know when we looked at it a few months ago, though, the city's turnover rate was still very, very low. So we had turnover of, I want to say it was about 5%, which for an organization of our size is extremely low. And in fact, some labor economists actually think that's too low. They think a healthy rate of turnover is more in the 10 to 15% range. Now that may change dramatically. I know that's something HR has been tracking and is concerned about, but we haven't yet seen, even with these eligible retirees, the waves of people leaving are more isolated, right? We're seeing it in some particular bureaus. Police bureaus very concerned about officers leaving, but that's not even so much the number of officers leaving as it is the amount of time it takes to get new officers in the door, which is creating the problems there. I think related then, to this, and as Josh talked about in terms of these personnel, cost growth and what that means. When we have new revenue and when we have particularly new ongoing funding, council has options, the city has options about expanding service levels, increasing city employee compensation, or making investments in infrastructure, efficiencies, and innovations. And one of the things that this slide is trying to get at is that to the extent we are adding additional staff or programs, or to the extent we're increasing employee compensation, we really are creating we're creating a long-term structural deficit that's going to require service cuts somewhere else. Because as we've shown, our general fund revenue historically has not kept up with those personnel cost growth increases. On the other hand, to the extent we can invest in our infrastructure backlog, or to the extent we can invest in efficiencies or innovations, we can actually see some long-term savings in the city, things that are going to bend that long-term cost curve down. And so I just think as we talk about both where the funding has gone and where any additional funding may go, I think it's important to keep that in mind, that there is that trade-off between that long-term cost curve within the city. Getting a little bit more specific in terms of what we're looking at for 2016-17, and I'm going to talk a little bit about what some of the potential liabilities that we're facing are, and then Josh is going to talk a little bit about where we are. We don't have numbers for you yet today, but I think you can give at least a little bit of a sense. Looking at the potential 2016-17 requests, and again, I don't think these lists on the next few slides are totally comprehensive, but we tried to capture the things that we know are likely to be coming back and be requested in 2016-17. We know there's a housing commitment of $20 million, and what we've shown here on this slide is breaking that down ongoing and one time. That's obviously going to be a council decision, so this is very much a swag at this point, but putting $5 million of general fund into housing ongoing. We know looking at 15-16, there's about $2.7 million of recurring requests. We know that in the fall bump we're going to talk about shortly, there's about $1.7 million that's being requested that we know bureaus have said they will be back in the 16-17 budget to ask for those again. The 13 firefighter positions, those are still one-time funded and will be expiring at the end of this year, absent some additional ongoing funding. We know the parks on an arbitration decision, phase one, we have it in there at $2.3 million, still working to sort of finalize what that year-long cost would be. But again, we know that that's just phase one, and phase two at this point is an unknown cost, but could be potentially large. We've talked, I know the city's talked a little bit about short-term rental taxes and using those for the Housing Investment Fund. Again, those are already in the forecast, so that's about $1.3 million. Of short-term rental taxes. And then body cameras we threw in as about a $700,000 ongoing cost. There's a little bit more of an upfront one-time cost, but that's a very low confidence estimate of what an ongoing cost for body cameras would be. So again, even without including the phase two of the parks arbitration decision, we're looking at over $15 million of potential ongoing requests in 16-17. And then on the one-time side, there's about $5 million of housing, and of course there will be a lot more.
Andrew, just for purposes of clarity, where does the $15 work that we've committed to fall within the ongoing requests?
Well, the update to the fair wage policy for our contractors was already paid for on an ongoing basis as part of this year's budget. Is that what you're referring to?
There's also been conversations about parks employees and others. So where are you penciling that in as a potential?
So that is not currently on the list. Yeah, to the extent we make. And then looking at, again, we talked a little bit about the recurring 15-16 requests. I won't go through these in detail, but again, sort of a list of things that we know were funded one time in 2015-16 that either the Bureau or a council member has noted will likely be back in the 16-17 budget asking for ongoing funding. And so you can see that listed a little over $2 million. And then in terms of the fall
I'm just
bump again.
curious, on the previous slide, you have it listed as 2.7 million. Are you just leaving some things out intentionally?
Oh,
Or,
it is 2.7. Do you remember? Oh yeah, I think that was we originally had the ONI marijuana regulatory positions on there, but since they're fee funded, we did take those off. I think we didn't catch it on the previous slide. And then potential recurring fall bump requests, and we're going to talk about these in a few minutes. So again, we don't need to spend a lot of time on them, but these are requests that, again, we know are in the fall bump that will be back if funded, or frankly, if they're funded or if they're not funded, we expect to see these back in the 16-17 budget process.
Okay, as Andrew said, we don't have numbers for you. There's reasons for that that we'll illuminate as we go through the next couple slides. We are expecting only modest revenue growth this year, at least in terms of the forecast and at least in terms of the December forecast. The reality is we don't know enough about business license taxes to dramatically change that forecast in December. We get 2/3 of our revenue after April 15th, and so to avoid moving that forecast all over the place based on some short-term look at it, it doesn't make a lot of sense. Property taxes, we will see an increase, probably about $3 million of ongoing. Like I said, that higher than expected growth will add some. Transient lodging taxes will probably see a low seven figures increase, $1 or $2 million as well. But we get a utility license payment November 15th. We also get some transient lodging data that'll help inform the forecast. We get the last piece of inflation data too that will help inform the forecast. And then as we've been talking about, there's a high likelihood that potential obligations will offset any revenue increases. This is particularly the case in ongoing. And that is because, as you recall, the state lost its, state and local governments for that matter, lost their the PERS case right after the April forecast came out, actually. And we're still crunching the numbers, but it looks like the out years in particular of the forecast, we're going to have to increase our expectations for PERS costs in a way that will offset almost any ongoing sort of revenue stream that we can see, at least for the December forecast. So next steps, as I mentioned, mid-November, we'll get a little bit more information. We get those PERS advisory rates for the city from PERS at the end of November. That will help us fine-tune our expectations about where we think our PERS costs are going to land. But we built in quite a bit of room for this next biennium. It's the biennium after where I think we're vulnerable to seeing some larger increases than expected. Cal targets will be released November 18th, and our budget kickoff for bureaus, and the forecast will be released in mid-December. That's where we are.
Go ahead, Don.
So, Andrew, let me go back to the slide that says potential FY 2016 requests and just make sure I understand how that relates to the previous slide called structural issue. If I'm sitting at this table later in the process and I have a request for 13 firefighters at 1.4 million, if I'm looking at a 10-year cost and I go out 10 years and assume the same rate, it looks like that year will be about $3.5 million at 120% increase. And then I add year 2 through 9, that's the total city liability for wages only for 13 firefighters for 10 years. Is that accurate? Is that an accurate thought process?
For those individuals, perhaps.
Yes.
for the city, not necessarily because of what Commissioner Fish was talking about, where to the extent that there's turnover, you can get savings from other
Okay.
individuals within the bureau to help cover those.
Assuming no
consequences.
turnover, that's the cost for those 13
Sure.
individuals. Well, it's always the cost for those 13
For
individuals.
those individuals, it's
There's an
just-
offset through, okay. So
Through
if
attrition.
I'm thinking 10 years ahead, that's a huge liability for the city.
Potentially.
Okay.
I've just been thinking about something that Josh mentioned earlier about the number of city employees being substantially similar to what it was 10 years ago. Is that accurate?
Yeah, I actually don't know if we have the numbers today, but we can get those to you.
I think
Yeah.
the answer is no. I mean, the last time I saw a chart, which I think you generated about a year or so ago for me, I mean, we're essentially flat for the last 10 years, total city employees.
The reason I ask is because, for citizens who are concerned about the cost of government, we've experienced significant population growth in that time, and the size of the city government has stayed about the same, which is a testament to efficiency to the extent that any of those key performance indicators have been going up, right? I mean, I think that's a message worth putting somewhere.
It's about 5,600 full-time, and again, I had that chart in my office and looked at it occasionally over the last couple of years, but you did this for me a couple of years ago, but it's relatively flat, and you're right, given what's happened to the size of the population, or even the size of the city budget, total full-time positions have not increased very much.
Yeah,
But
I mean,
it's different in different. Well, it's different in different bureaus. So development services went cut half to about from 300 to 150. They're now back up to where they were. So there's those additional jobs over the past 5 years. And then in parks, we're currently, under the arbitrator's decision, required to change some part-time seasonals to either full-time or certainly ongoing benefited positions. So we just did 86 of those, which was what's represented in that 2.3 million. So yes, there's still the same number of employees, perhaps, but they're actually getting paid properly rather than being paid seasonal workers.
In 2006-07, we had 5,765, and in 2000, the current budget, 2015-16, it's 5,628, so down by a little more than 100 in that period of
Is that
time. And there was a ramp up to about 6,000, and then a decline.
Is that actual employees or full-time equivalents?
Full-time equivalent.
Let's talk about, move into then the conversation about budget guidance. I'll see where we are on the slides here. There we go. Jeremy, you want to talk about budget calendar?
So the budget calendar should look pretty similar to years past. It's a draft budget calendar at this point. We haven't brought it forward for council approval yet, but we're hoping after today's work session, if there aren't any issues, we can bring that forward in the next month or so. As you can see, we're bringing, as usual, about February 1st, February 2nd, right in that time frame is usually when bureaus bring in their requested budget submissions. This includes requests for special appropriations as well, if we can get them in by that deadline. CBO works on the reviews over about the next month, and you usually get those right around, beginning of March 7th or so. Then we'll move into about 3 weeks of work sessions, including the citizen advisors. I think we already have those on everybody's schedule, so hopefully we can, it's about 6 hours a week or so over that 3-week time frame. Moves into the mayor's proposed budget process in that month of April. As you can see, we also have a couple tentative dates for the community budget forums on April 5th and 12th, so we'll get those scheduled as soon as we can find locations and kind of get those on everybody's calendar as well. Going into the mayor's proposed process, we have the general fund forecast right around April 26th. The mayor is going to release his proposed budget around the 28th. We have scheduled the second approved budget work session, which will be on May 10th. So we'll be doing that again this year. We move kind of in that approved budget phase where we have the approved budget hearing. The council approves the budget on May 18th, and then we kind of get into that TSCC process. It takes about 20 days with hopefully adopting a budget on June 9th. So pretty similar to previous years. We have kind of moved it up a couple weeks to save a little bit of time, but it's pretty much the same. Questions?
Looks good, thank you.
So then, In terms of 2016-17 budget guidance, what you see on the next slide is a draft 2016-17 budget guidance, and I think there may have been some conversations, and so we wanted to sort of have that conversation here as well in terms of and of course there are a number of different options here. One of the things that the city budget office put forward, and I think the mayor has also talked about, is given the declaration of a housing state of emergency, does council want to take action in the fall bump to essentially increase the current appropriation level target for the Housing Bureau to capture at least that initial $10 million of general fund. And by doing so, that action would take place before the forecast is released. So essentially what that means is council would be saying, this is a priority, there's a housing state of emergency, and we're going to go ahead and give housing that certainty so they can go forward and develop what those packages will be in terms of how that funding will be spent. And then whatever the guidance for the rest of the city bureaus is, the Bureau of Housing would not be required to submit any reduction packages, obviously, because the intent is to get some additional funding there. And I think as part of the budget process around housing is when council would be discussing the specifics of where that $10 million would be going. Guidance for the other bureaus, and sort of related to that decision, is that general fund discretionary and overhead bureaus that receive general fund discretionary and overhead would be required to submit 5% ongoing reduction options. And again, the reason for that, we don't have a forecast yet, but it is, as we've mentioned, with all of the potential requests that are coming forward, again, a draft list here that we showed you of more than $15 million, and the housing state of emergency and desire to get more general fund funding there, it seems almost certain that we would need to see some reductions from bureaus. And so again, I think what a 5% does is it again sends that signal to bureaus that they need to be putting some thought into what those reductions would be. Council then would be able to look at the forecast combined with those reductions and make some decisions in terms of that internal allocation within the city. Other requested budget requirements for non-general fund bureaus would be, under this scenario, would be at the commissioner in charge's discretion. So again, for water and sewer, for the OMF internal services, for bureaus that rely on programs, on fees and so forth. Again, commissioner in charge looking, because those bureaus are in such different fiscal situations.
So what do you propose to do about the parks obligation?
At this point, I think that's a good conversation for council to have. Again, one of the reasons we came forward with this was given the council's declaration of a housing emergency, seemed to put that in a different category than some of the other budget obligations.
So colleagues, I would suggest that having an arbitrar's directive to say that we have to pay our parks workers appropriately is in a similar vein, and I would propose that we put that, at least some of it, up above the line in the Cal, like housing.
Well, I agree. It's a different situation. I have to say, coming out of the the executive session, and then some of the events of the past week, I now feel like I need another executive session to drill down on what the actual numbers are and what the strategy is. And until we do that, I'm not prepared to commit to anything, because I thought I understood the parameters, and now I don't understand them as well.
Be glad to talk with you about that one-on-one, as well as I think as another executive session would be a good suggestion. I was really struck by the City Budget Office's analysis of the Housing Bureau's budget last year, and had some questions about performance management and outcomes there. So before we agree that we don't want any cuts in housing and that we're going to do these appropriations, I would really like to have some more information from the City Budget Office as to your advice about how to find out which programs are working and which ones are not.
I think as a general matter, one of the things that we have said is that to the extent there is this additional investment in housing, I think it's really important that we know what the goals are and what the expected outcomes are of that investment. And I think that does require looking at some of those programs to see what is working the best, and then ensuring that that's where those funds are going. I think there is an opportunity during the budget process, even under this guidance. I think there's an opportunity in the budget process for council to have a really robust conversation about how that $10 million general fund, and I know there's some other resources being discussed as well, how that gets allocated into which programs. Can still be part of the process.
I'm concerned about the not putting forward cut packages, although certainly glad that we will not be having the previous cut packages from housing, all of which were untenable and which I voted against. But I hope that there will be a requirement for the Housing Bureau to drill down into their structure and look at, are there more efficient ways of doing things, and are there ways to get better outcomes with all of their money as well as the additional 10 million or whatever it ends up being.
So my feeling about this, and I reflect the conversation that we've had, and also some conversation I've had with Andrew. I think both the housing state of emergency and the parks arbitration requirements are, I would call them budget imperatives. We have to do something. We have to build both of those assumptions at some level into our construction of a proposed budget. We have evaluation to do. Are we spending the money the right way now? Exactly how much is that mandate from the arbitrator, and how quickly, over how many years do we have to phase it in, and then how do we make good on our housing state of emergency in a significant way? So to me, it's both and, with the big asterisk that we still have to quantify each one and see how many general fund dollars we have to spend. We have other budgetary imperatives outside of the general fund budget, like we need to increase transportation revenue. But to me, I think that's the art of this, is that both of these are going to have to be built at some quantity into the budget guidance, and then I've got to look at the forecast and come up with a proposed budget that tries to meet both goals and still make acceptable trade-offs in other bureau budgets in order to achieve them.
I just I have a hard time, given what we just heard, which is that it's likely that our increased demands in the budget will be at least equal to any increased revenues. I would have a hard time saying that we should commit right now to cutting the rest of the general fund budget by $10 million in order to increase the housing budget by $10 million.
I mean, again, that's important to remember in the stages of this process. We're not committing to a budget, but we are giving instructions for how to prepare the proposals. We still have all the opportunity that we always have to decide for or against a given bureau's budget or a given decision package in terms of what we add or subtract.
That's a very important clarification. I mean, I don't have an objection to, it's probably a good idea for all of the bureaus, every year, frankly, to go through the 5% cut exercise. Yeah, and
actually, it's miserable, Commissioner. It is really soul destroying, and it's really hard on our community partners and on our employees, because when we're talking about cuts, we're talking about people losing their jobs. So having that exercise every year, which we did over the course of the recession, sorry to interrupt, was just awful, and I want to emphasize how awful it was.
I appreciate that. It's also an opportunity to, hopefully, to let the public know what the consequences, how tight our budgets are, and what the consequences of cuts would be. What I want to make clear is nobody here is offering to cut anything in the rest of the budget by millions of dollars. My one major general fund bureau is BOEC, where everybody's working forced overtime constantly, and they could not tolerate any kind of cut in their budget. So I just think, there's a big difference between voting to go through an analytical process and making a commitment that we're going to be able to find $10 million, is all I'm saying.
So, Mayor, if I could just add a comment to this. You made a judgment last year in a time of plenty not to do a modified zero-based budgeting. There is, in line with what Commissioner Fritz just said, there's an argument for doing it, especially in the good years, because it takes away some of that anxiety, and it gets back to what is the public benefit of a modified zero-based budgeting exercise. In the 7 years that I've been on the council, I thought the exercise we went through in your first year, which was very painful and very difficult, and I accept all those observations, forced a kind of prioritization that we had not done before. And it is against sort of those tough forced choices that bureaus, I think, were especially focused on prioritizing, not doing it in a loose and casual way, but recognizing that they may lose something. So what's really fundamental? And I, as a member of council, and remember, I used to have 2 general fund bureaus that competed. Now I have 2 utilities that are outside of the general fund family. So I've had a taste of both. I just found that it created a discipline in our budget process that was useful. Now, I take Commissioner Fritz's point very seriously that it also creates enormous anxiety and it puts very valued employees in a very tough spot. I accept all that. But I haven't seen a better exercise in terms of forcing bureaus to declare what's important and what isn't. And even if you don't take the cuts, I think the exercise itself has proven to be very beneficial in terms of creating priorities.
The challenge, though, is it's all based on what was your previous year. And I appreciate that we're now saying that housing has historically been underfunded and needs to get better funded, so we're rebalancing from that. We know that more than half the general fund budget is police and fire. And as Commissioner Novick pointed out, BOAC, are we going to, as we did during the recession, try to hold the public safety bureaus more harmless? That's a question that I would need to know before we can go into this session. The other question for me is Parks looking at a 5% cut plus a 16% cut if we have to absorb all of the costs ourselves? Or are other bureaus going to share in those costs? Because historically, Parks has been underfunded, perhaps as much as housing, because so many of our workers have been getting minimum wage with no benefits.
Well, I do think, I mean, notwithstanding the pain people get put through, I think a 5% cut is a healthy exercise for this council to undertake.
I think in retrospect, it would have been a good idea to do it even in the surplus year, because it does perhaps reduce the shock value a little bit to the bureaus that we are once again going to ask you to do this.
Yeah, and I would also agree that public safety agencies should not necessarily be exempt from the 5% cut.
Commissioner Fritz, this obviously creates even more work, but would it alleviate some of your concerns if we simply established a practice of also asking bureaus to say what they would do with a 5% increase? I mean, we're not likely to see a 5% increase, but I think that in terms of sort of the public discussion, having bureaus explain, here's some things we really would like to do, here's what it would cost, might be valuable.
The way we survived the budget discussions during the recession was to be dreaming as well, to be thinking about, well, we don't have it this year, but what would we do if we had more money? How could we create the efficiencies and the better programs? So certainly that's what I'll be doing in my bureaus, is looking at, yeah, we can't do it this year, but what is a long-term plan for achieving equity of funding across the neighborhood association boundaries? What is the long-term plan for how we would run parks? I have to go back to the question, though, when are we going to decide whether Parks is going to absorb the entire cost of the arbitration decision or whether that's going to be shared?
But doesn't that decision come later when we get the numbers, the forecast numbers? I mean, we haven't even talked about the impact of the Saltzman rule, but that's an annual part of our annual ritual is we get these dour and gloomy forecasts from the guys in the gray suits crunching our numbers. And at some point, the Saltzman rule kicks in, and there's typically a little more money. But without that number, we don't know how much we might have to take from any cuts. So, and that number doesn't come to us until when, Andrew?
December is the first
We're
forecast.
required to have a settlement by December 1st.
Yeah, the Saltzman rule is the financial policy that says we need to forecast conservatively.
Again, on the parks issues, Commissioner Fritz, my preference would be to have an executive session because I'm actually less clear today than I was actually at the close of our last session. So let's go back and have that conversation privately.
Sounds like we might want to do that fairly quickly, and then I can issue guidance. You're going to need it really fast. You're going to need guidance sooner than that.
So there is a decision, I guess I would say two things. There is a decision in the fall bump that will be coming next week if council wants to adjust the Housing Bureau's current appropriation level target. That is a decision that should be made as part of the fall bump. Guidance to the bureaus, there's no set timeline on. As we've heard earlier, is better for them, but there is a little bit of time to work that out.
the bump, how are you proposing to fund the current obligation of the 86 workers that are now going to be bargaining unit?
So without skipping quite to the bump yet, but specifically on that question, the proposed bump before you sets $900,000 of general fund contingency aside, holds it for the Parks Bureau until the spring, and then expects the Parks Bureau to then absorb the remainder of the current year costs, which we don't know what those current year costs are, but maybe to the tune of $600,000 or $700,000. And when I say absorb, out of their comp set aside.
We can't do that. So that essentially is a cut to parks in the bump. My understanding when we put it as a one-time in the last year's budget, we were going to talk about general comp set aside, not just parks's.
And yeah, that's an option for council to make those cuts in other bureaus. I mean, that's the distinction you're making is between cutting,
Well, it is the
parks
question
versus
of,
cutting
does
other
parks
bureaus.
eat it, or do we share the
That's
pain?
right.
And that's, I think, a question that needs, that, at least for this year's, I need to know, because we will need to probably take cuts in parks this year.
So let me hold that just for a couple minutes. I think we just have one more slide here on the council budget work sessions. And again, just doesn't necessarily need to be decided today, but wanted to put on the table, again, given some of the feedback from our Kaizen event, from the bureaus and discussions with your offices, in terms of making the council budget work sessions relevant and the most relevant as they can be for you as a council and for our citizen budget advisors as well. We've put three options there in terms of, and all of these are bureau-specific work sessions. We sort of did topic-centered work sessions a couple years ago, and while there were some advantages to that, the feedback generally was that people felt like they had a hard time digging into a particular bureau's budget when we were talking about public safety as a whole or emergency management as a whole. So keeping a bureau-specific focus. Option number one is bureau presentations, followed by council questions. So this is the more traditional approach that we've generally done, that a bureau presents something and council asks questions. Option number two is that bureaus would receive questions from council prior to those work sessions, and the discussion would be focused around council's areas of interest. So this would require a little bit more pre-work with both, and I think that would be both council and our citizen advisors, but essentially having the time scheduled, but making sure the bureaus are receiving questions from you on what are you most interested in hearing from that particular bureau in advance. And then option number three actually says maybe we don't need work sessions for every bureau, maybe we just want to focus on specific bureaus, again, based on council priorities. So maybe the city budget office doesn't need to have a budget work session, but some of the other bureaus you may want to hear from. So again, we don't need to necessarily make that decision today, but we wanted to put those options on the table just for feedback.
I was just going to say, I mean, it seems to me like you could do option 2 and 3 as a combination, because if you had a bureau for which there were very few or no questions, then that would essentially take you to option 3, right? I mean, because if the bureau presentations were based on input from council and advisors, and there were very limited questions, that would let you know that that was a bureau that probably didn't need to make a presentation.
If we're going to be in a cut budget, I suggest every bureau is going to want to present to council, because they're going to want to try to make their case for why their cuts should not be made.
But that doesn't necessarily prohibit us from doing some of what you've recommended in option 2 or 3. That is specifically getting some questions to bureaus in advance. But it sounds like there may be more of an interest in, if we are indeed looking at trade-offs and cuts, making sure that each bureau does get a chance to make its case.
And maybe there is a combination there between 1 and 2. So all bureaus do have a work session, but with some questions in advance. Again, I think the feedback I've gotten from most of your offices about past work sessions is that they would be a little bit more relevant if we dug into some of the issues specifically, a little bit less high level on the bureau and a little bit more specifics on the budget. And I think we could get there by getting some questions in advance. So, okay, great. So that is the end of the 16-17 portion of the work session. I don't know if we want to just go straight into, roll right into bump. Let's do it.
Andrew, what sort of time constraints would number 2 put on your office to get the budgets out in time so the questions could be formulated?
We would build that into our process. We would, while we're writing our reviews of bureau budgets, we would probably be speaking to you and to council offices about things that you want to hear. Yeah,
Good,
so it would
good.
be a simultaneous.
Thank you.
Okay, let me shift then, and we do not have slides for this portion of the conversation. Shifting into the 2015-16 fall bump, and with me today is Jessica Kennard, who's our bump coordinator and relatively new to the city. She'll kick me into the table, one of our California transplants that we talked about earlier in the presentation, but originally an Oregon native, so we got her back, which is great. So what we're going to do is we'll sort of walk through the fall bump, and what you have on the table before you is the mayor's proposed bump, again with the filing deadline. So we filed that last night. Work session today to discuss the proposed bump. It will be coming to council next week for conversation and vote. Feel free to jump in at any point in time. There's quite a bit in the fall bump, and I'll just sort of go through all the various pieces. And I'll try and point you to different places to might help follow along. And do we have? Let's get that table around as well. It's the same one I have here. So the fall bump is an opportunity for bureaus to reconcile prior year ending balances. It's an opportunity for them to make adjustments within their budget, and it's an opportunity for them to request resources if needed for the current fiscal year. One of the things, just to give an overall sense of where we ended the year, I sent an email to council a few weeks ago about the concern that we were going to miss ending fund balance by about $3 million. It turns out that we actually exceeded ending fund balance, and we had an ending fund balance that was budgeted at about $40.2 million. We have a beginning balance that's $46.2 million. So we actually ended up exceeding balance by about $6 million. And the difference there was what happened with bureau encumbrances. So we had about $9 million of encumbrances on the books. It turns out the bureau's only requested about $3.7 million. And so that savings really was the difference in terms of where we ended up. When I talk about that $46.2 million beginning balance, we do still have to back out of that, again, the encumbrances, and I'll go to the F1 report in just a minute that's a little bit more familiar. But what we end up with in terms of excess balance under city financial policy is $1.45 million. And then per policy, 50% of that needs to be spent on infrastructure maintenance and replacement. So again, about $720,000 for that. In terms of overall general fund contingency, the table that's coming around now may be a good place to start, just to give an overall sense of where we are in the proposed bump. So if everyone has that one pager that came around separately, what you can see at the top there. Before the fall bump, general fund contingency, this is unrestricted contingency, is about $2.2 million. What we were able to add to that, we added about $544,000 from unallocated fair wage set aside. When council made the decision to change the fair wage policy to pay our contractors, we set aside about $900,000. The actual costs for the current year were lower than that, about $300,000. So we were able to add that remaining $544,000 to contingency. And then again, as I mentioned, that $1.4 million ending fund balance, half is going to go to capital, but then the other half goes into contingency, and that's the $724,000 number you see there. So the total available unrestricted contingency is just under $3.5 million, again, as we start talking about the bump. Now, I'll talk in more detail about the proposed expenditures listed below, but in total, the mayor's proposed bump spends about $4.9 million, just under $4.9 million. And so actually a little bit more than what is available. And so as a result, we did reallocate some of the Portland Building debt service from the current fiscal year, 2015-16, $2.5 million to replenish contingency and get that number back up to $1.1 million. What's going on there with the Portland building is as you'll recall in the budget process, you set aside, again, $2,575,000 that would pay debt service. That would be the general fund share of that debt service. Given the updated timelines and council decision to move forward, that debt service is not needed in 2015-16. So that is available to reprogram to some of these other priorities. But it will be needed again in future years. And one of the principles, and I think you've heard Ken Rust and Fred Mueller talk to you about this, of the Portland building project is, and all of our capital projects, is making sure we have a 5% cash upfront on those projects. And so that is, future year funding and potentially some other funding will still be needed to hit that cash target, but it was determined that was available to get to that 1.1 million. And then at a high level, you can see of that $4.9 million that's being spent, $2.7 million of that is going to housing and shelter. $900,000 is being set aside for the parks labor costs, $600,000 for police background investigators, and then just about $700,000 of miscellaneous expenses. So I'm going to dive into a little bit more detail. Any questions about sort of the overall picture and where we started and where we end up with the proposed?
Andrew, I apologize, but when will we decide how to spend the capital set aside, $700,000?
As part of this conversation. Yep. In terms of new general fund requests, and in your packet that came around is what we affectionately refer to as the F1 report. It is towards the end of the packet, I think about 3 pages in, and it's titled General Fund Reconciliation. It's Exhibit 4. And so I will not go exactly in order in terms of what's here. I'm going to talk what's funded first and what's not funded. But again, you can follow along in terms of what's there. Bureau submitted $5.9 million of new requests and program carry forward requests for the general fund. CBO recommended funding, and again, we sent our reviews to you about a week ago. We recommended funding $1.6 million of those requests. And just to remind you, the city budget office criteria, which is based on city financial policy for spending general fund contingency, we only recommend for requests that are urgent and unforeseen, and that cannot be absorbed, or we don't believe can be absorbed within existing Bureau budgets. And I think one of the principles as we go through this that we should keep in mind, and it's similar to the conversation we just had about the 16-17 budget in total, is we do have a $580 million general fund, and I think the first place that bureaus and council should look is within that existing $580 million before going to contingency, because of some of the unknowns that may come up during the year. So hitting the highlights in terms of what we recommended, and then in terms of what's the additional things included in the mayor's proposed bump, just about $600,000 for 11 police background investigators. The Police Bureau currently has 35 vacancies with about 90 officers eligible for retirement, and projecting a 52% increase in overtime to cover needed shifts. The backgrounding process is very lengthy, and we saw this in the early and mid 2000s when they sort of hit a critical mass where it became very difficult for the Police Bureau to hire and get enough people in the pipeline to again offset some of those overtime and staffing costs. So again, recommended for the 11 background investigators.
So, Mayor, could I at some point get a briefing on why it takes so long and what exactly is checking? I saw an article in the paper that said that it takes one investigator 7 months to check into a single applicant. Sounds like they go and interview childhood friends or something.
Yes, they actually do. So, yeah, I will arrange that with the Police Bureau, because it is a little vexing, I think, to all of us that it really takes that many person hours to document the background check for a new officer. So, yes. Short answer to your question, yes, we will. $425,000 for housing choice vouchers. This includes $250,000 for cash transfer to households for leasing expenses, $150,000 for staff to provide housing search assistance, and a small $25,000 for a study to update the HUD's fair market rate.
So Andrew? Are those all part of the housing 10 million?
Yes, I believe so. It hasn't been exactly defined what's in that bucket. They are part of the $2.7 million that I mentioned is in the bump for housing.
So that's a question, Mayor, that I have. If we're going to be putting the 10 million into the CAL, the council has the right to decide how it's spent. So if it just goes into the CAL, then when would we get their proposed ways of spending it back.
When we see a budget proposal, because even though it's in the CAL, it's still in the budget proposal. But I'm assuming that if we approve these bump requests, that the dollars we're committing to the housing emergency here count against our pledge overall.
I'd like to see that very carefully delineated and spelled out so that we know when we've got there.
Andrew, is this appropriate time to pose a question to Director Krieger about that ask? Since he's here.
Behind me.
Oh, right there. So my question is, the current challenge we face with the Housing Choice Voucher Program, which is also known as Section 8, is that there aren't enough units available for people to rent. So the success rate has come below 75%. In the past, the success rate was influenced by the way in which the program was administered, and so there was a reform effort to make it work better. And there are other factors in the past that caused us to either fall below or above what is an optimal success rate. But my understanding, Mr. Director, is that the principal reason that the Housing Authority of Home Forward is experiencing only about a 75% success rate, meaning only about 75% of voucher holders can find a landlord to rent an apartment within the statutory period of time, or otherwise they have to turn it back, which is terrible for that family. It also leaves money on the table for the community. My understanding is it has to do with supply. So how does this particular ask help us remedy the structural problem we have that there's a shortage of units available for renting?
I'm glad you asked that question, Commissioner Fish, members of council. I've operated housing authorities in a couple of different states, so I'm pretty close to the details on this. And the Home Forward came to us initially with a request for two elements which are embedded in this proposal. One was to provide financial resources, which they will match dollar for dollar, for navigators. And these would be people with cultural competence to assist tenants who have a housing choice voucher but need someone to advocate for them with the landlord themselves. Often non-English speakers, perhaps immigrants, who can't navigate the system by themselves. Home Forward does receive administrative support from HUD to actually administer the program, but not a level of funding sufficient to allow a culturally competent subcontractor to do that work. The other factor that we've included in this is some bridge funding to assist households that have perhaps a flawed credit history or a flawed tenant history. Landlords are increasingly just using credit scores as a classification by which to determine whether or not they want to rent to someone. And of course, they're picking the highest possible credit score. If someone has a lien, a judgment, a foreclosure, a short sale, even though they may be income eligible, they will likely not be considered. There are some practical issues that we can help with. One is that if you have a prior unpaid utility bill, A, it'll show up on your credit, and B, you won't be able to get your power turned on until you have that removed. So we're providing some bridge funding, which will be matched dollar for dollar by Home Forward to help alleviate some of those issues. And then the more profound one that we've been very successful in negotiating our regional partners with is to recalibrate the fair market rent itself. HUD has an office called the Office of Policy Development and Research. They develop a fair market rent, which is a standard promulgated around the country for every metropolitan area. And it's indexed by family size and bedroom type. So a studio, 1 bedroom, 2, 3, and 4 bedroom unit can be rented up to a maximum fair market rent standard. The fair market rent method that HUD uses data trending back 3 years. So in a market where the velocity is changing rapidly, the fair market rent standard is not accurate. HUD does allow, at the expense of local municipalities, a jurisdiction to come up with their own fair market rent standard using something called a comprehensive economic study. We initially agreed with Home Forward to share the cost of that effort, and they, at HUD's urging, have enlisted also the support of Washington County, Clackamas County, and Vancouver. So it will be a metropolitan area-wide FMR standard. The vendor for this has just recently completed this work for Metro King County, and it happens to be Washington State University. So they have a team of researchers that have done this work. HUD accepted that methodology, and we would amend our intergovernmental agreement with Home Forward, which is currently an open source agreement for a range of services, to include these services.
So Kurt, just on that point, Section 8 is the largest housing program in the state.
There's $70 million of rental assistance that flows to Multnomah County from that program.
It targets some of the most vulnerable families. The Home Forward has agreed to project-base quite a number of Section 8 vouchers, which is going to help us pencil out some of the deeply subsidized units that you are investing in. And so all of those are reasons to do this. I guess since we're the city council, I just also need to ask you, because we don't administer this program, are you asking the city to contribute because Home Forward doesn't have sufficient resources of its own to cover this cost?
Indeed, we are. I think it's a good investment of resources. At the present time, just to frame the issue, $70 million of rental assistance comes to Multnomah County, most of which is used inside the city of Portland. Housing Choice Voucher recipients pay 1/3 of their income for rent, and the voucher pays the difference between their 1/3 and the fair market rent standard. So Home Forward cuts a check every month to hundreds of landlords to pay for that difference. So the renters are essentially held harmless, if you will, from any rent increases as long as it's within that fair market rent standard. The 30% covers rent and utilities, which I think is an important point, which allows them, of course, other net revenue to cover expenses such as food and medical. So it's very helpful from the economic mobility standpoint. It provides family resilience, it keeps kids in school, and it helps families succeed economically. Home Forward receives funds to administer the program from HUD, but it's an administrative fee just to allocate the resources and to monitor the overall program, not to provide the deeper, richer service package that we think is necessary. And because we are electing to do our own fair market rent standard, that's a cost that we would absorb here regionally, which we think is a good investment of funds.
I really appreciate that description. In fact, I'd like to get a transcript of it because it was so clear. And I think given that we've declared a state of emergency, given that there's 23,000 households in our community that are deeply vulnerable at or below the poverty line, the more that we can do to boost the success rate and get those vouchers into circulation, the better we are off as a community. And having 25% of vouchers go unused at any one time is a calamity in this market. So
I think it's worth mentioning that as recently as 2011, the success rate, the placement rate, was 91%. In 2015, it's 75%. So we've seen a precipitous decline in the utilization, and that's giving folks 120 days to find an apartment with an extension of up to 60 days. So they really have half a year to find an apartment, and even then, only 75% are doing so.
Yeah, I also had a question about the Housing Bureau analysis here, and I was wondering if it made more sense to do that now or wait until we get to it. And okay, so on page 47 of the materials that we were presented, there's a paragraph that talks about the $16.173 million that are being moved into the next fiscal year. And down at the bottom, it talks about all the things that have to take place prior to construction. And it is a lengthy list, but I couldn't help but wonder, in a city which is having such issues with affordable housing, this list of things that has to happen before the project loan can be closed, it hasn't changed. So or if it has changed, please let me know. So this is a pipeline that's well known. I'm just wondering what reason there is that the Housing Bureau couldn't get this money out the door and allocated within this fiscal year and is having to delay it.
Well, I'm sure as every commissioner knows, capital projects often take more than one fiscal year. And in the case of housing, 18 to 36 months is not unusual for a project to obtain the necessary permits, attract the other financing necessary. The Housing Bureau is often the first money in these projects. So we, for example, today will announce the availability of some $61.5 million in additional tax increment financing and federal funding. The applicants for those funds will have until February to submit their applications. We will make a funding decision prior to the state allocation of low-income housing tax credits. Applicants that are using tax credits then apply to Oregon Housing and Community Services for those tax credits. And they usually wait until they have an indication of whether or not they will get the tax credits before they earnestly begin the permit process, because they don't know if they have a high likelihood of funding or not and will not likely go out of pocket for those expenses. In some instances, we do provide pre-development funding, and a few nonprofits such as Bridge have their own pre-development funding, and they may choose to simultaneously do design development at the same time that they're accumulating funding. So once they have the tax credits, they can essentially proceed and close in a timely fashion. Like any design development process, it includes often design review, could take them a year in design development before we are able to close the loan. So the multitasking of both the design development and the permit process and the accumulation of the other necessary funding often takes 18 to 36 months. So we are, in this case, recognizing that some projects have had to be moved forward to do so.
Just a quick follow-up. So that figure is typical year over year of carryover from the previous year as a result of not being able to get all the projects out the door in time?
I think it's representative. I haven't seen a trend analysis to know if it's typical or not. Yeah.
Well, it begs the question of whether or not, like, doing this as an annual, I guess there's no choice. But I mean, for something like this, looking at a multi-year budget may make more sense. I don't know.
Okay. Moving on then in terms of what's included in the bump. So we've talked about the background investigators and the housing, at least the housing choice vouchers piece. There's $220,000 in program carryover. $88,000 of that is in ONI for small neighborhood grants. There's a small innovation grant in BHR and $121,000 in COCO support funding in the mayor's office. In terms of other new packages, there's $88,000 for the city's share of our cash contribution regarding the Columbia River levy and the further study of the levy as we move forward. There's $80,000 in unspent PDC. Essentially, it's encumbrance carryover. It gets treated a little bit differently because they're not a city bureau, but it's unspent funds from last year. $61,000 for a new IPR investigator in the auditor's office. The office did request 2 positions. CBO recommended one of those 2 positions since the rules and requirements around House Bill 2002 are still forthcoming. And I think we note in our review that the auditor may need additional resources once those rules are established. $60,000 is included for eviction prevention services through the Gateway Center for Victims of Domestic Violence. $49,000 for the Bureau of Development Services to pay for waived demolition appeal fees. I think it's worth pointing out on this one, we were surprised to find out that this is around the city's council's recent decision to give more access to the city appeals process to our hearings code officer, that BDS is concerned about the use of development permit fees to pay the costs of that hearing. So essentially when that fee is waived, concerned about their ability to subsidize, because they still have to pay for the hearing that takes place, use development fees. We did ask the city attorney, who said that there is enough of a legal question that there needs to be some clarity around it. And so CBO recommended, and it's included in the mayor's proposed bump, that they get that $49,000 in the current year, but also that council direct them to work with the state to really get clarity around that. It seems to me that this is all part of the permitting process, including the appeals process, and those development fees should be available for that. But again, there needs to be some additional legal clarity from the state.
My recollection is we specifically exempted the demo piece because we had just had that discussion and with a different process. So the Title 24 demo appeal was exempted from the auditor's appeal.
The request we got was, again, to pay for those appeals. I think it's of neighborhood associations that appeal demolitions, that when we waive that fee, there's still a cost. BDS may have more detail.
Yeah, I don't necessarily need to have it now, but I'd like more information on how many appeals have come in. I'm really surprised that it's 49,000 because I don't know that there have been that many demo appeals. But in particular, we had that conversation when we had the council directive about the other kinds of appeals and specifically exempted the Title 24 appeals.
Small amount for the Citizens Utility Board mailers. $5,000 was included in the budget. It's going to be about $1,600 more than that. And then
before you move on, I'm just questioning why you're not recommending, and the mayor hasn't recommended funding the Institute on Aging position for PSU. And I should note, actually, just that did inadvertently got left out of our reviews, so I apologize for that. If you looked for any narrative about it, it was submitted to us, to our office, but it did get dropped out of our reviews. We did make sure it was included here. From CBO's perspective, it's not an urgent or unforeseen request. There was a much larger request in the 15-16 budget process, which council did not fund, and this particular request is for salaries, staff costs of a professor and a graduate student up at PSU, as well as about $10,000 of PSU overhead. To us, it didn't seem urgent or unforeseen for use of contingency funding. So I would expect an amendment to be proposed at the budget.
In addition, then, there's $2.3 million in the mayor's proposed bump for shelter-related costs, again, related back to the housing state of emergency, again, which brings the total, including the vouchers we've talked about for housing and homeless investments, to $2.75 million. And of that amount, $1 million of that is capital upgrades to the Sears facility to make it available for use as a temporary shelter. The Sears facility upgrades overall are about $1.9 million. Facilities believes, and I do want to stress, I think it's still a low confidence estimate, but they are working, to develop it further. They think for about $1 million they could get the facility ready to open as a potential emergency shelter.
And these are, as I understand them, capital improvements to that facility that are required to be carried out for its intended purpose as a West Side Emergency Services Facility. In other words, ADA improvements, and installation of an elevator, those kinds of capital improvements are required under our disposition agreement with the federal government. Regardless of its temporary use, we still need to get on with the work for its ultimate use. $900,000, as we mentioned earlier, is set aside from general fund contingency to support the current year costs of implementing the Parks Arbitration Award. This wasn't requested as a decision package because, again, Parks, I think, had gotten direction to wait until the spring, but we wanted to make sure that some contingency funding was set aside to ensure that it wasn't spent on something else in the meantime. And so, again, as Commissioner Fritz raised, I think that's a policy conversation for council to have. $100,000 is included for parks rangers and cleanup costs. These were additional hours that were worked last summer, so the costs have already been incurred.
So let me just address both of those, if I might interrupt. The ranger positions were agreed over the summer that was when the extra need was incurred, so we've already spent that money, so it'd be really nice if we get it back. But in terms of the paying for the current budget positions that are already in phase one, 86 positions, we're only getting 900,000 in this proposal. The estimated cost is 1.6 to 2.3. So that proposal means a $700 to $1.4 million cut within parks. And then I also noticed on your Cal set-aside target, which we're coming to later on the last page, Exhibit 6, that Parks' Cal is only being increased by about 233,000. So it looks like we're being already asked to eat that ongoing cost of 1.6 to 2.3 million. So is a decision being made in this full bump that indeed Parks is asked to make that cut now?
So I think the sort of separating out the current year and 15, 16, and 16, 17 issues. What is in the bump for 15, 16 is the assumption that $900,000 would be available to Parks from contingency, and that the remaining costs would be absorbed by Parks, potentially from their compensation set aside, which is about $700,000 is their share for the current year.
So that even wouldn't.
And the question, and we don't know what the current year costs are going to be. The 1.6 to 2.3 million dollars was a range. I think the latest information I think we have from the Parks Bureau is, they expect the current year cost to be lower than that. Since again, some of these costs, as we bring these employees over, they get pay raises at 6 months and a year under the city pay scale. So that's, I think, why that cost may be larger in the future than it is in the current year. But again, that cost was unknown. So we're not even sure it's going to necessarily be $1.6 million, but we're working closely with the Parks Bureau. For 16, 17, that decision hasn't been made. I think that the way it would be made is through the budget process. We would expect to see Parks come forward with a request to increase. But as we've also seen, it may, the decision council is going to have is to give all new funding for that or partial new funding, and require some offsets within the Bureau. And I think the overall question that you all are struggling with in this is are some of those services going to be stopped as a result of that arbitration decision? And I think that's the conversation that we can have as part of the 16-17 budget
Well,
process.
that's a budget discussion, but I don't even know how I would prepare the Parks proposed budget without having some direction from council, at least on the ones that we've already done. I don't understand why that's not going into Parks' Cal.
Again, even with the ones that are already done, the question is, are those, if council is making the decision that all of those positions, were there 88 of those positions, I think, will continue into next year, or are they making the decision that we'll make sure they're funded, but we need to look at those positions next year, or we need to look elsewhere within the Parks Bureau to see if there are offsets?
I don't even see how we're going to get to the end of this year without making cuts, though. The 700,000 you said is in comp set aside is potentially not enough to cover, besides which there's other employees that might need to tap into the comp set aside.
That's right. Taking Parks comp set aside would require the Bureau to potentially make some reductions this year. They would need to monitor very closely where they are.
But isn't it your estimate that the 700,000 that's in comp set aside plus this 900,000 is enough to get through this year based on the positions that have already been identified?
We think so far it's enough to get through this year, but it is, as we've pointed out, taking comp set aside does mean that bureaus need to manage that. A lot of bureaus, particularly Parks and Police and Fire, they all sort of, they know what their comp set aside amount is, and they look at that as they go through their year. So this would not be available to the Parks Bureau any longer.
For the purposes of comp set aside. It's not like we can tap into it for anything. Right. So, you will remember that in the spring of this year, we had to borrow $1 million of general fund because we thought we might be tapping right up against the ceiling of what we had available. We ended up being able to make some additional savings and be able to pay that $1 million back. But that's how close the margin is in Parks. When we have available, we have work to our budget. And because we have so many seasonals, we're able to provide the services with a very, very fine margin of error. So I'm just,
well, I think
if council wants to make, that is a question that we will be having at the budget discussion next week. Does council want Parks to take cuts this year?
Just to be clear, what I'm hearing you say, Andrew, is that through the end of this fiscal year, the combination of the set aside in contingency plus the comp set aside should be enough to cover those costs. If it falls short, don't we have two bumps where Commissioner Fritz and the Parks Bureau could come forward and ask for additional resources out of the contingency or elsewhere?
We have a spring bump and an over expenditure ordinance, yeah, and assuming there are resources available.
And Commissioner Fritz has done a laudable job highlighting that may very well happen. But I also think the $900,000, as was explained to me, is at least carving some money out now to cover what we expect to be a contingent obligation.
The issue is, should parks have to drain all of their comp set aside, or should other bureaus be asked to contribute some of their comp set aside?
Well, I think again, Mr. Fish has noted the need for us to maybe have another executive session to understand our situation completely. But this was a measure of support for the Bureau for now. That's what my intention was here. That plus the comp set aside that is available keeps the Bureau, or should keep the Bureau whole until our next gate in this slalom that we're on here, trying to figure out exactly how we scroll those employees in and when.
I think we should be sending a message to all of our bureaus now that they need to be mindful of that comp set aside and trying to keep positions vacant, not just in parks.
I think that's a prudent suggestion, because one way or another, all the bureaus are going to share in this burden. Because
Well, under the current proposal,
we
it's
only have one
not.
general fund. I know, but one way or another, at the end of the day, all the bureaus are going to share in this burden because it's one general fund, and we're making a huge change in one of our bureaus.
One of the things that we did over the course of the recession was to have a mid-year cut of, I think, 1% across the board, and asked everybody to scrub their budgets and avoid capital purchases or whatever. And that actually netted a fair amount of money. So I would recommend that we have that discussion too.
Other things that are included in the bump, $32,000 for costs associated with the Last Thursday program over this last summer, $32,000 for the Police Bureau for increased costs associated with the PPCOA agreement, which has been negotiated, has not yet been ratified by council, and then $28,000 in support for the Restorative Justice Program. And then Commissioner Novick, you talked about the capital set aside. So in this budget, the mayor's proposed budget includes $1.7 million in funding for major infrastructure and maintenance projects, exceeding that 50% allocation requirement, which was about $720,000. And the two major projects that are funded, the 911 center, uninterrupted power supply. There are some, that system is close to or in failure, and so there's some concern if we were to experience a power outage, the switch over to the backup generators may actually cause some explosions, which would be very bad and send the 911 center down. So again, there's, trying to see how that, $670,000 is included for that, and then as I mentioned previously, the $1 million for the Sears Center occupancy needs. And just as a reminder, those projects, we did receive $40 million of Bureau capital set-aside requests. We did put out the call to bureaus, even though we knew the amount was going to be very small. We did say, go ahead and submit your capital funding requests so that we can go through that scoring process now, and we use the same ranking process we have used in the past. And as we go forward into next year's budget process, we assume those will all stay on the table. It's worth noting the BOEC request was the second highest funded. There was a traffic signal reconstruction project that was also highly funded, but sort of in our analysis, the citywide implications of the 911 center seemed to, and also the funding amount was a little bit more in line with the resources available.
So, don't need it right at the moment, but I would like to hear, well, at the moment would be great, but how did we get to the point where we needed to make this investment in the uninterrupted power supply system, given that we already had one? So, again, I don't necessarily need that right now, Commissioner Novick, unless you have it at your fingertips, but it would be good for us to know that how did we get to this place where this thing's on its last legs?
I can't articulate it well enough at my fingertips, but I'll get that to you.
Okay, thank you.
Ask for follow-up.
Somebody who owns a...
Mayor, my understanding is, my understanding in the briefing I got from Commissioner Novick's office is it's intended to make the system more resilient.
Seems to be working, that strategy.
those are the requests that are included. I'm happy to talk about any of the requests that are not included if there are questions about those. And you can see again on Exhibit 4 what is and is not. I wasn't going to go through every one of those, though, unless there's a desire to. Okay. Getting close to the end here. New positions that are in the bump. The mayor's proposed bump includes a net increase of 38.75 positions. That includes the creation of 22.5 full-time positions, 15 limited term, converting 7 limited term over to full-time, reclassifying 1 existing position, and converting 2 part-time positions. And I do want to note, for those of you who read our reviews carefully, I think we did double count the water positions in our reviews. We said 4. I believe it's only 2. The appropriate number is reflected in the numbers that came along. I apologize to Commissioner Fish for that.
So I understand how, that we get more positions in or fee-funded bureaus, development services, and the utilities. How do we do these conversions outside of the budget process with no additional resources?
So anything in the general fund, general fund bureaus can add new positions if they reallocate existing resources. So if they take from their materials and services and reallocate that, that's an ongoing source. They do not get new ongoing positions in the fall bump from contingency, though. Those would be limited term or one-time funded positions.
So it just strikes me that there's a lot of new positions that have been created by materials and services, and can we please scrub the materials and services lines to find out where there's some additional money that could go into other things?
So I have a question that can be answered later, but in general, how many limited term positions end up being converted to full-time positions? So you don't have to answer that now, but I'd like us to look at that.
Okay. Don, did you have a
So
question?
are these?
Go ahead, I was
sorry.
gonna say.
Are these the requests? Or are these what you're recommending?
This is what is in the mayor's proposed bump that will be voted on next week. Yeah, exactly. And then very quickly, I'll wrap up. Notable non-general fund changes that are happening in bureaus. The Bureau of Environmental Services, they're appropriating funds to refund $1.5 million of SDCs paid by the developer of the Hasselo on 8th for completion of their living system on-site treatment facility. And CBO makes a recommendation that should that facility prove successful or other developers seek to include similar features, the Bureau work to develop a consistent policy to address that type of development going forward. The Office of Neighborhood Involvement is adding 5 new positions related to the marijuana program. Portland Housing Bureau, which was discussed earlier, again, the de-appropriation, the $16.2 million of affordable housing resources because those costs won't occur until 16-17. Bureau of Transportation, they're carrying over $3.4 million in garage revenue and putting in contingency in the Parking Facilities Fund in the set-aside for major maintenance at the 10th and Yamo Garage, bringing the total set-aside to $7.2 million. And then the Water Bureau is creating 1 new environmental tech position to address increased water sampling demands. And cost for that position will be absorbed within resources for the current year. And then finally, at the very end, just budget notes and Cal Target adjustments. This bump does direct Cal Target adjustments related to the fair wage. Again, just adjusting because those were ongoing funds that you included in the budget. So adjusting those into the future so that again, those increased costs, we've now distributed those funds and will be accounted for. In terms of business license tax collection, there was a budget note from the 15-16 budget that asked OMF to renegotiate the IGA with the county related to business license tax collection and pull in an extra $650,000, which we believe is the more appropriate allocation of those costs. And so their Cal Target is reduced accordingly. It is worth noting that negotiation is not yet complete. And if it is unsuccessful, I think council is going to need to address that in the budget and consider what level of subsidy we want to continue for that operation, if any. And then finally, the housing Cal Target adjustments that we've been discussing, the $5 million one-time and $5 million ongoing, are also included in the bump. I'm done.
Okay, other questions either from our advisors or from council at this point? Again, proposals for amendments should be brought to the council session next week. Any other follow-up? We'll obviously get you that briefing from the police bureau. I'm going to get the same one, so others may want to hear that as well. So might even do it together since we won't be having a quorum. Anything else for the good of the order? Andrew, thank you very much to you and your team. Good work. Thank you very much.
Thank you.